you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
2 hours away from the opening bell from New York City this morning. Good morning on TV and radio. Here's the price action. We advanced a little bit, up 0.4% on the S&P. There's a lift on the Nasdaq too. The Nasdaq 100 up 0.5% on the week. We're heading for a week of gains. That's the equity market. Here's the bond market story. 2s, 10s and 30s. Bank of America this morning saying 50 is the new 25. You know where I'm going with this. Even Morgan Stanley on board. A 50 basis point hike in May for them from the Fed. And again in June. We're looking for some big moves, and Goldman looking for some curve inversion at the end of this year, and a 2-year pushing 3%. 290 is their call. Your 2-year right now, 115.82. Yields up there just a little bit, and 10's down just a little bit. That curve flatter again. Your 10-year, 235.75. That's the bond market. Here's the FX market. Euro dollar. The IFO Business Confidence Survey out of Germany. They said it collapsed. Confidence collapsing for German businesses. That's a problem. Euro dollar, this is a problem for the ECB, 110.20. Have we fully clarified the reaction function of the European Central Bank? That's a conversation I've had throughout this week. And Tom, what on earth do you do with this one if this ECB could be hiking at the end of this year into a recession?
I think a lot of it waits, and I'm going to go to the German confidence numbers that we saw today, John, this morning, 10 a.m., Michigan data as well. I'm going to suggest a lot of the certitude of the readjustment forward, I should say, is hinged on what those confidence numbers report.
Kaylee teed up the confidence numbers and the Fed speak too through today and into the weekend. That's the cross-asset price action. Let's get to Katie Lines for some single names. Hey, Kaylee.
Hey, John. Well, of course, you just ran us through equities, bonds, FX. Talk about commodities as well, because oil is down about 2% on the day, and that is translating to some of those single names in early hours this morning. The likes of Diamondback, which is, of course, a shale player here in the U.S., it's off a little more than 1%. On the flip side, though, you, of course, had the U.S. and EU inking that deal to supply 15 billion cubic meters of LNG exports to the European Union. That is benefiting LNG players. Perhaps no surprise. Cheniere, a big one here, up 1.7%. I wanted to make mention of Bed Bath & Beyond as well. Bloomberg scoop overnight that it is getting close to a deal with activist investor Ryan Cohn to add 3 directors to the company's board. Of course, he had been pushing for potentially a sale of its Bye Bye Baby unit or an outright sale of the company itself. That stock right now is up about 0.7%. But it is a much bigger move to the upside for one group of stocks in particular, and that is cannabis stocks, pot stocks, you might say. The House yesterday saying one committee will be taking up a bill, looking at a bill to decriminalize marijuana at the federal level. So as a result, you saw 20% plus moves for Sundial and Tilray in the Thursday session. Those gains continuing in early hours on this Friday, up about 16, 17% respectively. And MJ, an ETF that tracks a lot of those cannabis stocks, it's higher as well by about 7% before the bell, Tom.
Very good, Kaylee. Thank you so much. Right now, as John mentions, the euro, and we focus on it with the president attending Warsaw. Jane Foley joins us, head of foreign exchange strategy at Rabobank. Jane, we've got 14 things to talk about, but we do have the news of the moment. What does euro signal, and what is your prediction of how it will move?
You know, I think the euro is signalling perhaps some optimism really amongst the market that Europe will avoid stagflation, that it will avoid recession. But there have been some nasty indicators this week. So you mentioned the IFO. If we go back a day and look at the PMI, well, we can look at the detail of that and see in those input prices, much higher prices coming through. Now, that is obviously one of the reasons that business confidence is beginning to flounder in the Eurozone. We've got higher prices for energy. Clearly, that's going to be more difficult for firms. And this is in a scenario where we can avoid blackouts. And that isn't, a foregone conclusion. There is still the energy security threat for Europe. So there are significant headwinds still, but the market taking an optimistic stance on that, at least for now.
And what's so important here, Jane, is the belief, hope, or maybe it's not going to happen, that financial authorities will follow the confidence data. What is your reading of how central banks adapt to a diminished confidence?
Well, if we look at Lagarde's comments just a few days ago, she said even on the worst case scenario, they're still going to have 2.3% growth in Europe this year, that stagflation will be avoided. Well, I would say that clearly that's not the worst case scenario. We know that there is question marks over energy supply. No one can really interpret what Putin is going to do. Yes, we know that he needs that money that he gets from selling energy, but at the same time, there is still, I would say, a small prospect that there could be energy crisis within German industry. That certainly could bring on recession in Germany and in Europe, if not further afield. So there are risks. But for now, the central bank, is I suppose plying the market with, this optimistic tone that, stagflation can be avoided. And the market appears to be happy to go along with that.
Jane, we were having a conversation earlier about the potential bleed through from a recession in Europe into the United States and what that would mean for the Federal Reserve. When you think about that, the dollar versus the rest of the world, its status as a reserve currency, the outlook for Federal Reserve policy, where does that leave you?
I think the dollar is certainly going to be a lot stronger this year than it would have been otherwise, than it would have been without this war. Because as you mentioned, the dollar status as the payments system currency really makes sure that people just need dollars. And also if they want to buy commodities, back to basics. I think this is what this crisis is all about for many. They will need dollars in order to do that. So the dollar, I think, will be stronger. But, if we look at the shape of that yield curve in the US, if we look at the concerns about, the conversations about whether or not we're going to have inversion in the US, whether or not the Fed can really be successful in taking out inflation without creating a recession, there's got to be longer term, medium term risks for the dollar into next year. But of course, that assumes that Europe can avoid recession. And that's something that will, by the end of the year, I think we should know, whether or not we've managed to do it. But because by then, I think Europe will have helped secure more alternate energy supplies. But for now, when it's still using an awful lot of Russian energy, there is, I think, so much doubt, so much concern over the direction for Europe.
Jen, you've just touched on something I think really, really interesting and quite important. If we're going to build out this energy relationship with the United States, the Europeans are, how long before that starts to take an effect on the currency pair? Are those kind of trade flows big enough to make a difference?
Well, certainly they are significant. I mean, if we're looking at just the energy relationship, I think that's going to get bigger and bigger in terms of the US and Europe. And for the European sake, I hope that does come off. There are a lot of concerns about the supply of energy. For instance, if we look at Australia, then that was a country that did promise more LNG, for instance, for Europe. But there are concerns that they may not be able to do too much of that without breaking existing contracts, that they may have some shortages on one of its own coasts. So they may not be able to provide, alternative supplies. It's going to be a long time, I think, before we can really be sure about the energy security situation in Europe. But certainly, I think the flows with the US will be really imperative to that.
Jane, how important is it to discuss how people feel? And you know why I ask this? Because in the UK, when I speak to my friends, my family, they feel like it's absolutely dreadful. And when we talk about the outlook, we still have an outlook of 3% plus GDP growth in the UK, slashed from the 6 number, the 6 handle they had a number of weeks ago. Jane, does that matter? When Katie Lines talks about sentiment numbers here in the United States, decade lows, we could see them again later on this morning. Does that matter?
You know, it will matter eventually, and I think you're right. You know, right now I'm find it quite difficult to reconcile with what I'm seeing in the mainstream press about, you know, the struggles that many people here are having with higher energy and food prices, and the data that I see, which is, you know, tight labour market with the Bank of England that has been tightening. But, you know, if we look at that statement from the Bank of England last week, yes, they did hike interest rates. But actually, the outlook was fairly pessimistic. They talked about, you know, slower growth. They talked about rising unemployment by the end of the year. And that is becoming reality right now. And what we're seeing in the consumer confidence data this morning in the UK is really plunging levels of consumer confidence. Retail sales far weaker than expected. And this is the impact on the consumer from rising inflation. This is finally, it's been having that impact on containing demand, which will eventually, of course, bring prices down.
Well, Jane, as you mentioned, the BOE tightening, the Fed tightening, the ECB may get there with a rate hike by the end of this year. Kuroda is not even close. The BOJ is not moving. You are seeing that widening divergence. A break of 122 on dollar yen yesterday. Where does it stop?
Well, you know, that there is a lot of momentum behind there. I mean, it's certainly gone faster than I anticipated at the end of the year. I had expected 120. That was my forecast at the beginning of the year. So 122 has really taken me by surprise. Now, you know, there's a couple of aspects here. You know, we have, of course, the interest rate differential story, the Bank of Japan remaining extremely dovish. But Japan is a massive energy importer. And if we look through the patterns that we're seeing in G10 currencies right now, we're seeing the energy exporting currencies, the Aussies and New Zealand, who don't export energy but they export food, performing really, really well. And the commodities importing currencies right at the end of the pile, the Japanese yen at the bottom of the pile, if we look at the performance of G10 since the start of the war, and just above the yen, underperforming, we have the European currencies. And this is a real rethink of, you know, what we would generally think about safe haven currencies. The yen was a safe haven. It's right down there, and this energy importing nature of Japan is part of that reason. So for now, you know, it's very difficult to see what's going to stop that. And I think there could be further to go on the upside around in dollar yen.
Jane, awesome as always. Jane Foley there of Rabobank. Kaylee, bottom line, crude, energy, gas seems to be at the epicenter. Food prices of pretty much everything we talk about.
Yeah, absolutely. All of these inflationary forces. And I think the food point is really important when we focus so much of our conversation on energy, especially with the deal between the U.S. and the EU today. But the world could be heading toward a serious hunger crisis, John. And when we talk about Ukraine and Russia and the commodities at play, we have to keep in mind this is one of the great bread baskets of the world, and that is something that maybe felt less even in Western countries, but in the emerging world, this could be a serious crisis.
The call from Mohammed Al-Erin earlier this week, Tommy said depression in Russia and Ukraine. He said recession in Europe, stagflation in the US, and for commodity importing developing countries, they could face, Tom, a debt crisis.
Yeah, I think the EM issue is really, really important. I'll be honest, John, out of the side here, I'm looking at Turkish lira with the importance of the Black Sea. But yeah, I think for EM, it's dead on.
An important conversation coming up with Michael Spence. Looking forward to this one. The Nobel laureate joins us next.
Keeping up to date with news from around the world with the first word, I'm Ritika Gupta. U.S. officials are worried that Russian President Vladimir Putin may lash out dangerously. They say Putin's tendency when boxed in is to escalate rather than back down. Russian troops have found themselves bogged down in Ukraine, and Western sanctions have begun to bite. Speculation is that Putin might respond by using chemical or even nuclear battlefield weapons. European Union officials suspect China may try to soften the impact of sanctions imposed on Russia. They say Beijing may be ready to supply semiconductors and other tech hardware to Moscow. China's potential influence on Russia was a central issue in talks at the NATO, EU, and G7 summits Thursday in Brussels. Canada will help nations that are trying to shift away from Russian energy by increasing oil and gas exports. The Canadian Resources Minister, Jonathan Wilkinson, said energy producers can boost shipments by the equivalent of 300,000 barrels a day. He said Canada and the U.S. already have the pipeline capacity to handle those extra volumes. Bloomberg has learned that 3 groups of mainly American investors have made it to the final round of bidding for the UK's Chelsea Football Club. The bidders include a consortium led by former Guggenheim Partners executive Todd Bowley, another by Apollo Global Management co-founder Josh Harris, and a third by the Ricketts family, the owner of baseball Chicago Cubs. The Ricketts have global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Of chemical weapons will totally change the nature of the conflict. It will be a blatant violation of international law, and it will have widespread consequences.
It's clearly a concern for NATO. That was Jens Stoltenberg, the NATO Secretary General from New York City. Good morning to you. Futures look like this on the S&P, positive 1/3 of 1%, up 0.4% on the NASDAQ. Yields come in just a basis point, Tom, on 10s at 236, and crude down almost 2%, down more than $2 this morning, 110.23.
Very good. Again, the future's up 15. Kriti Gupta right now with a chart on American export might.
Yeah, Tom, we talk a lot about who's going to make up for the commodities that are essentially coming off the market or aren't finding any buyers from Russia, whether it's agriculture, whether it's metals, whether it's oil. It actually turns out the United States is poised to make up some of the market share. So that brings up my chart of the day here. It's a two-liner. I'm a little bit scandalous on the Tom Keene scale, but the white line, I'm getting Tom Keene's approval. It's a good day already. You got a white line that is rising going back to the 90s that shows the total U.S. exports. For a radio audience, you also have overlaid with the S&P 500 in blue. And what you need to know is that when exports go up, the stock market does too. So in this kind of environment where we're talking about demand destruction, we're talking about what this might all mean for the end consumer and therefore for the markets, it kind of seems like the U.S. is poised to weather that storm, not just because of the strong consumer, because at the end of the day, they're also an export economy. And that's one of the bull cases for the equity market.
Kriti Gupta, thank you so much. He writes for Project Syndicate. He has done so much for economics and for all of American graduate education. Laureate Michael Spence joins us now, of course, senior advisor to General Atlantic, as well as his academics. Professor Spence, thank you so much for joining. I want to talk about two things right now, and I want to go back to your iconic work on signaling. I was talking with our Simon Kennedy about pandemic signaling. How has our behavior changed from the pandemic? Is there a permanence to how the American economy, our labor market, our investment, how it will change?
Yes, there is. I mean, I think it's unambiguous. You know, the accelerated adoption in digital, the changed patterns of work, the impact of the pandemic on what kinds of jobs people want to have, when they want to retire, and so on. I think betting that these changes will all sort of fade away would be one of the worst bets possible. So I have no doubt. I mean, Tom, you know, actually seeing in detail, you know, how this will play out over the next 3 to 5 years is very difficult. But I don't have any question it's permanent.
Michael,
at least some of it.
In your latest essay for Project Syndicate, there are 2 paragraphs that are classic Michael Spence. I can see you with a piece of chalk in your hand at Stanford or NYU, ready to throw it at someone who doesn't understand correlation. You talk about the magnitude, the size, or the growing size of our uncorrelated risks. All of our listeners and viewers know right now, uncorrelated risks are off the chart. What does that mean for our society? What does that mean for our capitalism?
It means a major shift in priorities, both for countries and for companies, in the direction of diversification. And it will be, you know, portrayed as a costly move. It will probably increase inflationary pressures. But anybody who is, you know, operates in the financial markets or has taken a course in finance knows that when you have rising risks and they're relatively uncorrelated, the proper response is diversification. And, you know, when you add together pandemics, supply chain congestion and blockages and longer term effects, a war, you know, and all the climate shocks that are getting more frequent and so on, I don't have any doubt that's the direction of movement that we're going to see.
Well, and speaking of the supply side, you talk about the shift to supply-constrained growth. What does that indicate about the permanence of some of the inflationary pressures that we are seeing?
So I may be a bit out on the tail of the distribution here, but I think this is a fundamental shift. You know, the deflationary pressures that we had in the global economy came very substantially from the fact that we had huge amounts of essentially unutilized productive capacity in the emerging markets. And we've used up a fair amount of that. And at the same time, we've created hundreds and hundreds of millions of new middle-class consumers on the demand side. So I think this is it's a secular trend. It doesn't happen overnight. But I think that plus all the other things that we just talked about, means that the inflationary pressures are likely to last for an extended period.
Michael Spence, you have made a study of the Pacific, and with your wonderful book, The Great Convergence of China, as well. Angela Stent at Georgetown talks about a potential move back to a state of Yalta, where we have a triangle between the United States, Russia, and China. Do you agree we could launch back to something early Cold War?
I think it's not the most likely outcome, but it's a possibility. So my take on what China's trying to do, and they're in a very awkward spot, so, not dissimilar to the awkward spot in central banks are in. But China understands something that President Putin doesn't seem to understand, and that is that any economy, even a big one, like China or even the United States, can't perform at anything like its full potential in isolation. And so I expect China to sort of move carefully and try to thread the needle, but to avoid a scenario in which we start dividing the world up into blocks, because it's completely inconsistent with their rather determined, domestic growth and development agenda.
Michael, can we talk about the important stuff for where you are? Can you describe for a global audience the mood of Milan, the morning after Italy fails to qualify for a World Cup? Can you convey that to everyone for us?
I don't think I can convey the depth of despair that we're all feeling as a result of bowing out of the World Cup. It's a shame. We have a lot of talent here. I don't know why this is happening. We had some success before, but it's pretty sad.
Let me pick it up here. John Farrell, why did this happen? How did this disaster, this depth of despair happen?
These kind of games happen where you play against a team that puts everyone behind the ball, defends for the whole game. You can't break through. They build confidence. They get that one chance and they score right at the end, Tom. It was just one of those games and they couldn't finish it. Chiesa was injured, one of our better players. That had something to do with it, but that's not a reason to go out to North Macedonia. But there we are. Michael, thank you.
I didn't know you were Italian, but anyway.
Half Italian.
That's very good.
There we go. We're in the same boat
Half
here.
Italian.
Which side of Milan is yours? Inter or Milan?
I think Inter.
Okay. Well, I'm on the other
Wrong
side of
side.
that bet, Michael. Wrong side. Wrong side. We might actually win our first title, Tom.
I know.
For the first time in more than 10 years.
When we take the show to Milan, we'll have to schedule around
we can do that.
derby.
I believe that would be the first league title outside of the Berlusconi era as well, Tom. I was there the last time.
Who's Berlusconi?
Do you not remember Berlusconi? You missed that? I was in the San Siro.
I was
the
at
last
a
time
party
we won
with
the
him
league.
once, but
You went to a party with Berlusconi. Would you like to tell us more?
on the break.
You sure? You can share it with us now. We have some time, Tom.
That's okay.
As he coyly sips
give
his
it,
tang.
Give it a miss. I'm sure he had a lot of tang at that party. Futures up 4/10 on the S&P from New York City. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Even though this war doesn't feel like a direct hit to U.S. growth, the implications of the inflation shock can be major.
We're preparing for tighter monetary policy, persistently higher energy-driven inflation.
We don't know how much of the inflation is transitory.
The Fed is very concerned that they're behind the curve.
They certainly don't want to cause a recession, but if it's necessary to slow the economy to get inflation down, it seems like they would be willing to do so at this point.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Kaylee Lyons in for Lisa on radio, on television. An important Friday. John, presidents have always moved to Poland. There's a domestic story in Chicago, Wisconsin, and Michigan. This time, it's not about America. It's about the Eastern Front.
Two issues, Tom, a refugee crisis and a security crisis as well. Let's talk about the refugees crisis. 3 million Ukrainian refugees, and the overwhelming majority of them, Tom, about 2/3 of them, I believe, have gone into Poland. That's why this first stop, Tom, is in a city very close to that border.
It's very important here, and as the United States talks of taking in 100,000, it really shows a humanitarian moment. John, we've underplayed it a bit, but the president's focus here is very much on the humanitarian issue.
And then on to unity and what we can do next, Tom. And what we can do next is hopefully some kind of energy agreement between the US and the EU. They announced that earlier this morning, and from there, the Germans want to rapidly decrease their dependence on Russian energy, Tom, and that's going to take a while. It's going to take years.
And Kaylee, the domestic calculus in Washington is important. There is Hungary, Belarus, the Baltic states, and such. But Poland speaks loud in the Congress.
And I think you are seeing the domestic pressures on the president, and that is why he's made many of the moves he has made. Congress putting pressure on him to front-run the U.S.'s own oil and energy embargo of Russian fossil fuels. Europe likely not going to follow suit, but the agreement today, Tom, at least a step forward in starting to wean the European Union off of Russian gas. It's just a process that is going to take years, not months.
Important economic data this morning, the Michigan numbers. But John, what's so important to me here, and you mentioned the Goldman Sachs research on the duration of inversion. We come in 4 basis points, make that that 5 basis points to 18 basis points. The difference between 2-year and 10-year ever narrower.
Goldman and the team coming out, Tom, and predicting, forecasting several years of curve inversion. Year end this year, they've got 2s at 290 and 10s at 270. Go out another year, Tom, it's a similar story for them. An inverted yield curve for a couple of years. A couple of years, Tom, what does that mean for the equity market? And where's the economy whilst that's happening? Because in Europe right now, we're facing a recession.
Very good. And here's a headline just in. We've got to comment on this headline, John. It speaks to a president thinking internationally. Kishida of Japan proposing that the president of the United States visit Japan in late April. That'll be something to look forward to. On data, John, I want to talk about something we rarely talk about. We parse Brent and West Texas Intermediate. All eyes in the pro land are on diesel distillate. That's the focus worldwide right now.
Energy prices have been climbing through the whole of this year. This morning, we pulled back a little bit on WTI and on Brent. Let's whip through the price action. Futures on the S&P and on the NASDAQ higher by 1/3 of 1%. Call it 0.4 of 1% on the NASDAQ. Yields come in a single basis point on a 10-year, but they are higher on 2s by 3 basis points. Your 2-year, 217. And the spread between the two, as Tom pointed out, is getting narrower. Your curve is getting flatter. A quick peek of euro dollar, Tom, just about holding on to 110, 110.13. We're positive on that currency pair, a little more than 1/10 of 1%.
Let's dive into market analysis now to get you to the second quarter of this tumultuous 2022. No one better than Jeffrey Yu, Senior EMA Market Strategist at BNY Mellon. Jeff, you are focused on the real yield. It has moved from a greater negative to a lesser negative statistic. How much further does it have to go to give us any sense of normal markets?
Well, it's interesting that you were talking about the curve, back then. So I do think that central bankers, they are going to start to be wary of what the curve is. I'm telling them, do you want to push the real yield higher by another 50 or 100 basis points and to actually get it outright positive? Because then demand destruction, which may already be taking place, that because of financial conditions tightening further, is going to only intensify. So we're going to be looking at a growth shock further down the line. I think that's what the yield curve is telling you right now. They're just gambling that the central banks are not willing to push real yields or financial conditions much tighter from here, or we're going to start to worry about the stag side of stagflation a lot more than the inflation side.
Jeff, just going through these Goldman calls, they've got curve inversion year-end 22, year-end 23, and year-end 24, they've got curve inversion again. How unprecedented would it be to see that develop and not see a recession?
Well, there are two things there. Curve inversion can happen for many reasons. I think right now, in the context of current growth and worries, clearly there are worries about demand destruction. But at the same time, when we had the long end flatten over 15, 20 years ago, that was when there was a savings glut and people went into U.S. Treasuries, especially from Asia. This time around, that probably will not happen as aggressively. If anything, China should probably run down its reserves a bit to spend domestically. So right now, it just shows you there is no demand. There's no demand coming out of Asia, or very limited. We're worried about real income growth coming off. That was something that the UK has been highlighting as well. So again, markets are challenging the Fed, central bankers. How much do you want to push this right now before you find out that you've already done too much and it's already too late?
We find out because the market often tells us, Jeff, and I wonder how much pushback we get from risk assets. At what point does this become really problematic? Given the calls we're hearing, 50 basis point hikes, May, June, balance sheet reduction in May. The likes of Deutsche Bank, Bank of America, numbers all the way up to, say, $2 trillion of balance sheet reduction through year-end 23. Is that problematic for risk assets?
Well, it depends which type of risk assets. I'm actually not too concerned about equities right now. There is a fairer amount of pricing. I would say I'm much more worried about corporate credit. If we look at what our custodial flows are showing, G10 markets, every single G10 market that we've tracked in recent weeks have been facing outflows in corporate market, in corporate bonds. No one wants to own that. And if you look at the decline in, say, iBoxx high yield right now, we're only just over halfway through what happened during the pandemic. So right now, I do think that one final injection of risk aversion or a risk premium needs to happen in the corporate credit space. That's when the tide really goes and we find out who's swimming naked. That hasn't happened yet.
Okay, Jeff, so you elaborated on why you're worried about credit. Why are you not worried about equities?
It's probably more an issue of what am I more worried about. So it's certainly corporate credit, because now that repricing hasn't happened yet. And truth be told, it may be harder to happen, especially when you have so much demand destruction. And when that happens, savings actually rise again, because imports have actually come off, especially in many traditional current account deficit nations. So will international investment flow, especially the Asian investors, are they still going to try to pick up yield, pick up corporate paper in the US? That's the uncertainty out there. And I don't think they will in the same amounts this time around. That's why I'm far more worried about equity allocation. I think the rotation has already happened.
Jeff, you talked about demand destruction there. At what point do we start to see the limits of companies' pricing power?
That's a really good point here, and I think, again, it differs place to place. In the US, I do think that as long as core CPI is still running at relatively high levels, or the gap between headline CPI or input prices versus CPI is sufficiently low, then corporates will have pricing power. And here's where the US actually stands in a better position, because the US is not really a trade-driven economy. Most of it's domestic spending, much more self-sufficient, autarkic, I may add, relative to Europe and Asia, some other areas. So that's where on a least worst case basis, the US is actually much better in Europe. So if you look at China, for example, input PPI running at close to double digits, CPI headline less than 1% right now. That really damages margins as well. So I think you're going to see much more differentiation up ahead when it comes to pricing power.
Jeff, can we finish by taking you back to your foreign exchange days? Can you tell me if an ECB hike is bullish for the euro? Can you tell me if a Bank of England hike is bullish for sterling? Because a lot of people question that now.
Right. ECB hike is bullish for Europe because it will only hike when there's clear reflation in Europe, and that will happen because fiscal. BOE hike, especially aggressive hikes, will be negative for sterling because that just exacerbates household cash flow. They're probably doing a bit too much. I see tremendous downside risk to UK growth expectations further down the line.
The moves we saw this week, Jeff, was something else. Big cuts to the outlook for UK growth. Jeff, you there of BNY Mellon. Jeff, thank you. TK, the outlook for UK growth, they had a 6 handle. It got slashed to 3. And this is what we're seeing take place around the world. You take the inflation outlook, you kick that much higher, you take your growth outlook, and you absolutely slash it. You bring that down lower.
We're not supposed to give our opinion, John, and I'm not going to do it here, but all my radar is up about confidence data, ISM data. There's this certitude that central bankers will not respond to it. My reading of history is I don't buy that for a moment.
Well, Tom, Kaylee's pointed out repeatedly. Kaylee, what do we get later? UMISH, close to a decade low?
Yeah, 2011 is the last time confidence was this low, while inflation expectations for the next year, highest since 1981.
And that is why, Tom, we're talking about the potential of a 50 basis point move in May, and Morgan Stanley's got them doing it again in June.
Okay. I thought when you said Kaylee, I thought you just meant that her bracket was better than ours. But
I think it is, isn't it?
Mine is
John,
better than yours,
everyone's
Tom.
bracket is better than mine.
This is a
John's
relative
is
game.
better than mine.
Just relatively speaking, but the three of us are doing
awful.
Terribly, right?
I'm acting like I'm British and have no clue. But I do that with football as well.
There's 39 brackets. Tom, I think you're at 36.
Thank you. Thank you.
John's at 31.
31. We're in the 30s.
We're in the 30s.
Just to be clear here, if I won, I would have claimed that it was all me. But given that I'm losing, this was producer Jamie, okay?
Okay, it's his fault.
Who messed up the bracket, and it's his fault. Is Gonzaga out?
Gonzaga's out.
Gonzaga,
yes.
so the whole thing's over for us, Tom. It's done. Futures look like this, up a third of 1% on the S&P, on the NASDAQ, up 0.4%. Your bond market's shaping up as follows, with yields higher at the front end of the curve and lower at the long end, down a basis point on 10 to 235.94. About an hour ago, the President of the United States leaving Brussels, Tom, on his way to Poland.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The US has struck a deal to help Europe replace Russian gas imports that will lead to additional imports of liquefied natural gas from the US. The issue is critical because Russia is the EU's biggest natural gas supplier, accounting for more than 40% of its imports. NATO is responding to the war in Ukraine by boosting its deployments in the eastern portion of the defense alliance. It will increase the number of battle groups in the region from 4 to 8. At the same time, the US said it was working with NATO to prepare for possible nuclear or chemical incidents by Russia. And the economy in Russia is on course for a deep recession. According to a Bloomberg poll of 24 analysts, Russia's GDP will shrink 9.6% this year and 1.5% in 2023. Meanwhile, inflation is now forecast to average 20% this year. That would be the fastest rate in about 2 decades. And the mystery is deepening over that crash of a China Eastern Airlines Boeing 737. At least one piece of the plane appears to have broken loose well before the impact. It was about 6 miles away from the main wreckage area. That could indicate the plane suffered some kind of mid-air breakup. And food delivery startup Instacart was a pandemic darling that's now facing a decelerating growth. The company is slashing its valuation by almost 40% to about $24 billion. Instacart says it's a move that will help attract talent by making stock awards more enticing. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg Technology is live from the Shop Talk Conference in Las Vegas. Emily Chang sits down with Uber CEO Dara Khosrowshahi, DoorDash President Christopher Payne, and Savage by Fenty President Christiane Pendarvis, bringing you insight and analysis on the future of retail.
Are there customers that you think you permanently won over?
Bloomberg Technology live, Tuesday at 5 p.m. in New York, 2 p.m. in San Francisco on Bloomberg Television.
China understands that its economic future is much more closely tied to the West than it is to Russia. I made it clear to him, I made no threats, but I made it clear to him that make sure he understood the consequences of him helping Russia.
The President of the United States on China. He goes from Brussels, where he made those comments, onto Poland and lands in the next hour. From New York City this morning, good morning. Futures up 1/3% on the S&P. On the NASDAQ up 0.4%. The response from Vladimir Putin, Tom, just moments ago, the Russian president holding a video conference with cultural figures. He says the West is attempting to cancel Russian culture. That headline just dropping, Tom, moments ago.
I saw the video, John, here on the break, and he was really engaged. His body language is like, I mean, I'm talking as an amateur, but his body language is as I've never seen. John, he was fully engaged, not furious, but just, it was very different than the Putin measured in and control that we've known for years.
Tom, we've seen fired up, I think.
Yeah,
in
that's
some
the
of
right
these news
phrase.
conferences, these video conferences, so to speak, over the last few weeks. That's for sure.
Let's get to a fired up Henrietta Trays, Director of Economic Policy Research at Veda Partners, with a take on Washington, a take on Capitol Hill as well. Henrietta, you know that every poll says Congress wants more from this president. What is the kind of pressure Washington is placing on President Biden?
It's really interesting. The polling data says that everyone in the United States, Democrats, independents, Republicans, support everything from providing more military might to Ukraine, even taking in Ukrainian refugees. The main qualm Republicans have with President Biden is that he's not moving quickly enough, that they want to see more. And then simultaneously, you'll ask a poll of American voters, is the president doing enough on Ukraine? And they say no. So every indicator is out there saying we support the efforts to provide assistance to Ukraine, whether that's militarily or in terms of additional sanctions on Russia. And so what that's led to is a slew of legislation out of members from the House and Senate, Democrats, Republicans, across crypto, gold, capital markets. It's across the board. And they've told us directly that that's designed to message not just to voters, but also to the president, that they support him taking whatever measures he sees fit.
I'm enough of a fossil to remember when the Polish vote or the Eastern European vote had huge weight, particularly in our Midwest. And I see from the statistics, it's not as much as it used to be 30, 40 years ago. But measure that weight right now. What is the Eastern European voice in Washington?
Well, I think you could go ask J.D. Vance about that. There are individual senators, people running for office who are, especially on certain sides of the aisle, trying to figure out where the American public is on this. It's all moving very rapidly. And the collective support for engagement in support of Ukraine is unlike anything we've seen in American history in quite some time, where we've been so fractured and polarized. So you can actually see where the pockets of Poland, Ukraine, other Eastern European regions are in the United States, across Ohio and the Midwest, based on how those individual congressmen and folks running for Senate are responding. And in a couple of cases, they've had to recalibrate rather quickly once they get response from their constituents and see that even though this is costing Americans at the pump and inflation is high and we're all coming off the pandemic, this is a global rallying component. I do think there's a healthy amount of questioning from experts, and in particular military folks, to say, how long is this going to last? How long will that constituent support remain? So that is a tricky question. I think that's part of the reason that President Biden went over to the EU today, or this week, to provide the optics, to continue engagement, get those shots of NATO allies working together, which United States citizens haven't seen in a very long time.
If I can pick up on three key issues coming into this and through the last 24 hours, Henrietta, the risk of chemical warfare A lot of discussion about that. Energy dependence, what we can do to help the Europeans start to cut back on that, curtail their dependence on Russian energy. The third point, China, and China's role in all of this. I've had a couple of comments from the President of the United States. I just wonder how much progress we made over the last couple of days, Henrietta. What's your read on that?
I think the key word for this entire situation is forewarning. For the first time in a long time, the administration, the White House, is telegraphing well in advance what to investors and constituents alike, what we should be expecting. So whether that's the original invasion, now calls to protect your cybersecurity, then fears about chemical weapons. And I think that the market is remiss to ignore this focus that the president is plainly targeting on China. When you speak with staff and they say their support for adding Russia, Belarus, and also China to the PNTR stripping legislation, that's not a joke. That is very serious. It is no longer fringe Democratic thinking to put China in that basket or fringe Republican thinking. It is mainstream now on the caucus, especially on the House side. So all this, I think, forewarning is something that we should take seriously. Everything that the president has said in the past has come to fruition, and I don't know that there should be this peace trade out there as robust as it is, given what we're hearing from them directly.
Henrietta, you talk about the forewarning of the risks we face, which the president has been clear about. Has he been clear enough on the warnings of what the response will be? He continues to warn of consequences, yet do we really know what they are if Russia crosses a red line?
Well, I think that depends on what your red line is. I think we have the benefit of hindsight and experience from past engagement, whether that's in Syria or elsewhere, to know that we need to classify exactly what kind of chemical weapons will result in which kind of response, where red lines are there. I think the president is doing something that is discomforting to the street in that it is not giving clear, cut and dry red line examples. But as we learned from President Obama and others, you run a risk when you put a red line in there that's either too specific or too vague. Consensus is expecting one outcome, you get another. I mean, we know how this is on the market side all the time with earnings reports. You really have to keep your leverage, your ability to maneuver as wide as possible and create uncertainty. And I think one of the things that's putting Putin off, and I heard from a speaker on your program yesterday, is just the business community's response. The government might waffle and go back and forth, but if the business community is self-sanctioning the way that they have with Coke and Pepsi pulling out and major oil and gas interests pulling out, those are things that nobody expected to see, least of all President Putin. So to see that engagement, I think, is really constructive in an area where President Biden cannot actually give red line answers and describe to you exactly what tit for tat means.
Henrietta, thank you. Henrietta Trace there of Veda Partners. Tom Keane, we're going to continue this conversation. Citi have just come out with a monster call on the Federal Reserve. 50 basis point hikes in May, June, July, September, then 25 in October and December.
I can't even do that math. Kaylee, help me here.
That's
it's a brain fade.
75 basis points.
We now expect, this is like it was written in...
It is a monster call from Andrew Hollenhorst and his team. We're going to revisit this back to back, May, June, July, September, 50 basis point hikes, 4 in a row. More still to come. From New York, this is Bloomberg.
but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
From New York City.
In London, in Sydney.
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Live from New York City on TV and radio for our audience worldwide. This is Bloomberg Surveillance. 1 hour until the opening bow with futures positive on the S&P and on the Nasdaq too. The Nasdaq up 0.4%. The S&P up a third. In the bond market, yields in a couple of basis points on 10s to 235.57 on 2s. Yields bleeding a little bit higher at the front end. The curve is flatter. Your 2-year up a couple of basis points to 216. It could be up a whole lot more if Citi turns out to be right. Take a look at this. A monster call from Andrew Hollenhorst and the team, including Veronica Clark, Isfan Manue. They're making this call, Tom. 50 basis point hikes, May, June, July, September, 25 in October and December. We end the year at 275. We end the next year, Tom.
Yeah, the next year is
the
the
next
key thing.
year, because they think it continues after that into 2023 at close to 350 to 375.
Let me frame this, and I'm going to go out, John, from the idiocy of the parlor game of 50 beeps, 25 beeps, and all that. I don't buy it for a minute. I've never done it. But I want to do this, and I want to go to the dots. None of this call by Citigroup is within the dots. Their terminal rate out end of 23 is center tendency 3.625%. That is a stunning statistic.
It's not near the median dot, but it's close to Jim Bullard's world. Let's put it that way, Tom. The median dot for this year.
Is it close to Bill Dudley's world, Muhammad El-Arian's world?
I mean, I don't. Mohammed actually thinks. I asked Mohammed, what would you do now? He thinks there's a binary choice between risking a recession or prolonging inflation.
Yeah, okay.
He thinks the least bad choice is to prolong inflation and not go too hard.
And
That's his view.
You know, this is really important from a central bank history. The least bad choice is El-Arian game theory, and that matters. Bill Gross used to say much the same thing. Right now, we're going to go to the best choice, which is Ian Shepardson, is fortunate to be in the studio. Ian, we have to rip up the script here, and the parlor game, you and I don't play it that much, but nevertheless, you have to frame, as Orzag would say, glide paths or reaction functions. Do you see glide paths that get us to that stunning kind of move that Mr. Hollenhorst speaks of?
Not in the time frame that they're looking at.
Exactly. The x-axis is the point of discussion here.
Indeed. So I am very much of the view that the terminal rate is going to be way higher than markets think. But I'm also of the view that it's going to take longer to get there than Citi are now suggesting. So I don't really have a problem with the idea that we're going to end up well into the 3s, and we may even hit 4 by the end of the cycle, but I don't think we're going to get there at that sort of speed.
And this is about elasticities or the responsiveness of a greater economy. If you take the GDP function, if you get there short-termism out 2 years, boom, you go boom to economic growth, don't you? But it imputes to a weaker economic growth.
Well, if they're going to hike at the speed that Citi are suggesting, even if you think that ultimately the economy can live with rates that high, getting there that quickly is going to really put a lot of stress very rapidly onto the private sector and will require a great deal of recalibration about how things work. So I'm really skeptical that they may well get, the first couple of 50s, but to carry on at that sort of pace, this is kind of 1994 all over again in terms of the speed and the scale of the hikes. And that ended up being very messy for the bond market. The economy didn't go into recession, but it was certainly under a lot of stress. And so I'm nervous that this is asking really a lot for an economy where there's probably some fragilities that we don't even know about yet coming out of the pandemic. And so I'd be quite surprised if the Fed is able to push on at that sort of speed without taking even a pause for breath.
Well, Ian, we have to talk about the data too. And in the line from Citi is the path remains data dependent. They just believe that the risk to inflation is still to the upside for the second half of the year. Would you agree with that assessment?
Yeah, this is where I differ with them, actually, that I think that the glide path for inflation maybe as soon as the second quarter is going to be quite steeply to the downside. I'm feeling really quite optimistic about, in particular, vehicle prices, 10% of the core CPI. We'll hit the anniversary of some really huge increases this spring, but I also think the sequential numbers are going to be falling because we're seeing auction prices decline and supply is improving. And that makes a big difference to where you think inflation will get to by the end of the year and the speed with which it comes down over the summer. And if it's surprising markets, media, and the Fed to the downside in the summer, then the pressure to keep going by 50-50 is much diminished. So that may be where I haven't seen Citi's inflation forecast, but that might be where I differ with them. If you think it's going to remain very elevated for a much longer period and we're really going to struggle to bring it down, then yeah, they'll have to go more aggressively. But of course, nobody knows. We're in very much unprecedented circumstances here.
So, Ian, what do you think the strategy is? Front load it? Wait until the summer? What would you do? What is the least bad choice?
I think that they need to get a grip on this expectations, the idea that they've got behind the curve and that they've left it too long. So I think they need to start making signals, and we're hearing that sort of verbally and in the dots and in Powell's press conferences very clearly that they want to get a grip on it. They want to be seen to be getting a grip on it. But I think the narrative changes as we get into the spring and the summer, where if those numbers come to the downside, and also maybe if growth doesn't have the traction that we all hope it has. The first quarter headlines are going to look quite soft because of inventories. And there is a huge question mark over how the household sector responds to the surge in food and energy prices. I think it'll be okay, but I don't know. It will depend on how willing people are to run down some of their savings. And maybe they say, we don't want to, in which case we're going to see some real sustained weakness. And again, that would suggest that starting with the 50 maybe, but keeping going, meeting after meeting, that's a big ask.
Well, Ian, you talk about how things could get better as soon as the second quarter, but there's obviously an ongoing war in Ukraine. Is your interpretation then that that's not just going to show up as much in the U.S. economy as it will for Europe?
Oh, there's no question that the difficulties for Europe are much greater on the back of the war in Ukraine, much more exposed to energy prices. Energy prices were already a huge problem for Europe even before the invasion, and a much more direct economic connections with Russia. So there's no doubt it bifurcates. Of course, it's even worse for emerging markets where people spend much more of their income on food and energy than we do in any Western economies, and where people buy much more raw, unprocessed food, and so they're going to see a much bigger hit. So the US is far removed from all of this. The feedback from weaker growth in Europe and EM into the US is actually quite small. This is a big domestic closed economy, really.
Ian, the cottage industry of physics envy and economics is led by America, the idiot mathiness of the American programs. But I would suggest the United Kingdom has really studied the nonlinearities of when you make moves. And what Citigroup is recommending here is an inertial force upon the economy that's essentially, I believe, if Alan Meltzer of Carnegie Mellon was here, the late, great Alan Meltzer, he'd say, we've never seen this before. This kind of physic move in raising rates. Do we have any experience at this?
Well, we raised rates very aggressively back in the early 90s, but of course the level of rates was higher. The gearing in the economy was much lower.
Stanley Fischer would say the gearing, was different.
Very, very different, absolutely different, and that's one of the reasons why we've had this long-term downward trend in nominal rates. But the UK is an interesting example. It's the Western economy that looks most like the US. There's some big differences, of course, Brexit. But the Bank of England is signaling pretty clearly they won't be raising rates very rapidly. And so what Citi is talking about is a massive widening of spreads between short rates in Europe and the US. And I buy the idea in principle that the US economy is fundamentally in better shape and less Ukraine sensitive, but it's the scale of the gap they're suggesting in such a short space of time that it'll be difficult.
Do you see how you make your luck, folks, on surveillance? When we invented this program, we said just book smart people. And when news breaks, John, it works out. Shepherdson's killed it.
Can I ask you, Ian, whether you think Wall Street, maybe even the City of London, is missing the mood of the country at the moment? Do you think it is?
Well, I mean, if you look at the consumer confidence numbers, pretty much everywhere now, we've seen a round of numbers out of Europe as well recently, they have fallen off a cliff with the Ukraine war. And they were weak anyway. I mean, some of the US surveys have been weakening really for some time. But the question is spending, is GDP the same as sentiment? Because if it isn't, if people say one thing and do the other, then if you're expecting the sentiment numbers to lead into a very weak economy, you could be getting it really completely wrong. And the reason why there might be such a big difference is that in the US, at least, households are sitting on trillions of dollars of savings that they accumulated during the pandemic. So they may well say when the conference board or the University of Michigan comes along and says, how do you feel? I feel terrible, but they still go to the mall because the money is there. And we've never seen this before, so that makes forecasting with any confidence really very difficult. And I'm glad Citi said their forecast was data dependent, because it sure is. Everything is very data dependent, and we just don't know. We need to admit, I think, the limits of our knowledge here, because we're facing uncertainty like we've never had before.
Just to finish on this and stay on the same point if we can, Ian, has it been helpful to you to be headquartered in Newcastle, in the north of the country, away from London? Has that contributed to a difference in opinion and outlook, a different way of thinking about the country, the economy?
Yeah, I mean, I don't do the cocktail party circuit in London or in New York, so I look at things maybe a little bit differently. But ultimately, I'm following the data like everybody else, and the data at the moment are extremely confusing, and the range, the cone of uncertainty is bigger than I've known it in 30 years.
Is the season ticket back?
Well, if I can get one, it will be.
So you want it back now, just to be clear?
I do want it back now.
You want it back now, okay.
John, April 3rd, it beckons. Tottenham, Newcastle.
In Newcastle?
It beckons.
Yeah.
Do you know how hard it will be to get tickets to that, Tom?
I
don't think people realise how difficult it is to get tickets for a Newcastle game, a home game.
Yeah.
Ian, what are the chances that you actually get your season ticket back for next year?
Well, that depends how willing I am to close my eyes and write a big check. But
so if
quite willing at this point.
If Adele shows up to watch her tots at Newcastle, how is Adele treated?
I'm sure she'd be invited
Tom,
to join us.
Have you ever seen a Newcastle fan, Tom?
No, I haven't.
Okay.
I've heard
one now. So.
Boxing Day, the day after Christmas, I think I went to a West Brom game, so that's in the Midlands. Super cold, freezing. And the Newcastle fans, they pack out the home stadium, great away attendance as well. At the away end, the Newcastle fans, Tom, tops off, shirts off, in the freezing cold in late December.
Adele would never do that.
Newcastle fans are some of the toughest out there, Tom.
They're wearing beer coats, John.
Unreal.
Seriously, have they been
beer,
affected?
sure.
The Saudis have taken over the team, right? Have they been affected? Quickly here.
Oh, well, the city is thrilled with
Ukraine and all that.
Well, the Ukraine situation is grim, but the Saudi takeover has been very welcome after the disaster of the previous years.
Someone wrote in, Tom, the game's in London. It's not in Newcastle, so it'll be at Spurs.
Oh yeah, Chelsea's
in
London.
So it doesn't have to travel. I thought you mentioned Spurs versus Newcastle.
Yeah, that's April 3rd.
Someone's just written in, the Geordies can come in their swim shorts. Do you like that, Ian?
Well, it won't be me.
From a terminal subscriber. From New York this morning, good morning. This is Bloomberg.
Keep Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. U.S. officials are worried that Russian President Vladimir Putin may lash out dangerously. They say Putin's tendency when boxed in is to escalate rather than back down. Russian troops have found themselves bogged down in Ukraine and Western sanctions have begun to bite. Speculation is that Putin might respond by using chemical or even nuclear battlefield weapons. European Union officials suspect China may try to soften the impact of sanctions imposed on Russia. They say Beijing may be ready to supply semiconductors and other tech hardware to Moscow. China's potential influence on Russia was a central issue in those talks at NATO, EU, and G7 summits Thursday in Brussels. And Canada says it will help nations that are trying to shift away from Russian energy by increasing oil and gas exports. The Canadian Resources Minister, Jonathan Wilkinson, said energy producers can boost shipments by the equivalent of 300,000 barrels a day. He said Canada and the U.S. already have the pipeline capacity to handle the extra volumes. And the U.S. and the European Union have agreed in principle to a new data transfer pact. That potentially averts a doomsday scenario for tech giants such as Facebook parent Meta Platforms and others who rely on free flows of information. A previous agreement was struck down due to concerns over the power of American agencies to snoop even on the data. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
The United States, together with our international partners, we're going to work to ensure an additional 15 billion cubic meters of liquefied natural gas, LNG, for Europe this year.
This will replace the LNG supply we currently receive from Russia.
The President of the United States on his way to Warsaw, there in Brussels with Ursula von der Leyen, with her unique German knowledge of defense and military, an important meeting. We had that, I believe, earlier this morning. And again, we're monitoring the president in the next hour, I believe, to land in Warsaw. Right now is my interview of the day, and not that I'm just back from Paris, and it was an extraordinary joy to see Paris preparing for the Olympics, but because he is hugely qualified with his public service to the French nation on this moment of war. Philippe Etienne is French ambassador to the United States of America, but far more, has had tours of duty, particularly in Romania. He understands Eastern Europe perhaps more than anyone entering the show. Ambassador, thank you so much for joining Bloomberg.
Thank you very much for having me.
Ambassador, we have limitations. I cannot speak to you, of course, of the domestic politics of France. I believe that's off limit this morning, but I can speak to you of when I'm in London and I get on the train and I go under the channel and I come out. There are the fields of wheat of France. You are in the absolute agricultural nexus of the rich helping the poor with limited food at this moment. How will France help the poor of the world with their wheat and other agricultural products?
It is indeed one of our duties and one of the initiatives we have decided yesterday at the summits in Brussels to take. France, like the United States, is an important producer of wheat, but we have collectively to help the world community to face a food security crisis, which is one of the threats caused by the Russian invasion of Ukraine. The first thing to do is, of course, to demand a ceasefire in Ukraine, for the Ukrainian people first, but also because it would be the only way to allow the Ukrainians to sow their seeds and to prepare for the next harvest. But we have also indeed to take initiatives to increase productions, to increase coordination internationally, to help all the countries who are the most vulnerable in the world and who depend from imports of wheat.
Ambassador, the president speaks of 100,000 refugees coming to America. It seems like a tragic statistic given the millions coming over the borders of Romania, of Poland, and the rest. Can France provide leadership in Europe with the amount of number of refugees coming into France? Can that statistic be had?
We have provided leadership because France is holding the rotating presidency of the Council of the European Union. And as soon as the war has started and as the refugees have started to come into the EU, we have decided as EU to give the Ukrainian refugees, more than 3 million already arriving to the European Union, to provide them with a special statute, protection statute. They are schooled, they have access to healthcare, they have access to jobs. We have been doing this immediately. Of course, the refugees first come to the border countries, Poland, Romania, also Slovakia, Hungary, also Moldova outside the EU, but now they are coming to other countries. And you see everywhere, including in France, a huge movement of solidarity for the tens of thousands of Ukrainian refugees, which are already in France, in Italy, of course in Germany, very many. So they are coming to us too. And as the EU, we have taken very, very quick and very bold measures to welcome them.
Ambassador, you spoke of Poland, where, of course, the President of the United States is expected to land in just about half an hour's time. Before he did so, though, he was in Brussels with Ursula von der Leyen announcing that agreement on U.S. LNG. What is the French feeling this morning about its energy security and whether or not it is able to wean itself off of Russia?
Well, even if France is a bit less dependent on imports from Russia than other EU countries, it is for us, as a presidency of the European Union, it is a common problem. It is a European problem. The European leaders were convened by our president in Versailles 2-3 weeks ago, and they decided to stop the dependency on Russian imports of energy, and also to increase in other fields, food, critical materials, the resilience of our economy. It's a huge lesson to learn from this war, and we will transform decisively the European Union. And to get rid of this dependency from imports from Russia in energy means first to accelerate our transition and also to diversify our supply, including of gas. From this point of view, the agreement which has been announced by the United States and the European Union about this 15 billion cubic meters additional of American supply to Europe is really important. And we will diversify our supplies so that we get rid of this dependency as quickly as possible.
Ambassador, in Paris on the River Seine are those bright gold domes. They stick out like a sore thumb, and it is Russian architecture of the Russian Orthodox Church. Explain to us the new relationship of Russia that you know so well with your representation of the nation in Moscow. Explain the new relationship you will perceive of Russia with Paris and France.
Well, for the time being, of course, we need to stop this war, and the relation is mostly that our president is among the leaders who has decided to continue to talk to the Russian president, to tell him that a ceasefire is absolutely necessary, humanitarian access is absolutely necessary. We have while we raise the sanctions and the price paid by Russia for this invasion, and these sanctions are really important now, we have to first, as a priority, absolute priority, to get to a ceasefire. And we are doing this in close coordination with the president of Ukraine. Of course, once there is a ceasefire, there could be negotiations, and once there would be negotiations, we could turn to the future. But the absolute priority is a ceasefire.
Ambassador, thank you so much for joining us this morning. Philippe Etienne, French ambassador to the United States. Kayleigh, it is something to come into to Paris and see the traditional architecture, and only made in the last number of years, the Holy Trinity Church of Russia. You wonder how that relationship will be here coming forward. Kayleigh, thank you for helping out when I was gone. Thank you for being here for Lisa. This has really worked out. Futures up 15, Dow futures up 87. Stay with us through the day on Bloomberg Radio and Bloomberg Television.
Welcome back to another Miami Open update for Bloomberg TV and Radio from Tennis Channel. I'm Erin Coscarelli. Thursday saw a major upset in the women's draw at the prestigious Masters 1000 event. Katerina Siniakova stunned the reigning U.S. Open champion Emma Raducanu in 3 tough sets to punch her ticket into the 3rd round. The Czech star fighting back from a set down to snap an 8-match losing streak against top 20 opponents.
I think I was more fighting with myself than the opponent, and then I kind of get some release, and it was much better. I was really working hard, so I'm so happy. It worked.
And Naomi Osaka won the battle of the major champions as she took out Angelique Kerber in a very impressive straight sets victory. And don't forget, Tennis Channel's live daily coverage from Florida hits the air at 11 a.m. Eastern.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Live from New York City this morning. Good morning, good morning. Your equity market a third of 1% higher on the S&P. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York, we begin with the big issue, the US and EU striking a deal.
Today, we've agreed on a joint game plan. We're coming together to reduce Europe's dependence on Russian energy.
The EU's Ursula von der Leyen confirming their unity.
We are continuing to reinforce our cooperation in many strategic ways. The US commitment to provide the European Union with additional at least 15 billion cubic meters of LNG this year is a big step in this direction.
This as Germany reveals its own targets, pledging to become almost independent from Russian gas by the middle of 2024. So as Europe hardens its stance, can Europe escape recession? The Italian Prime Minister Mario Draghi says yes.
I wouldn't call it recession. I don't think we have a recession. I think we're having a slowing down of the economy.
Team coverage begins right now with Bloomberg's Anne-Marie in Warsaw and Maria Tadeo in Brussels. AMH, any moment now, the President of the United States landing in Poland from Brussels to Poland. The objectives today, what are they?
Jonathan, we move from the diplomatic objective of this presidential trip to now the humanitarian, really an olive branch to Poland, which has become the epicenter of the humanitarian crisis. 10 million people, the United Nations High Commission of Refugees says, was displaced because of this war. More than 3 million of those individuals in the surrounding countries of Ukraine, Poland really being ground zero. He's going to meet, though, Jonathan, tomorrow for a bilateral meeting with the president of Poland. This is going to be an interesting one, Jonathan, because these two administrations have not always seen eye to eye. But now is a moment that we've really seen a lot of unity around Poland, even though this is a president that is a populist president. There's been a lot of questions about judicial independence here, press freedom here, LGBTQ rights here. But this is a moment where they're going to really focus on the humanitarian effort that's taking place in Poland.
Maria, that's the challenge in front of the president. Let's talk about the achievements behind him. What was achieved in Brussels?
Well, Jonathan, in many ways, more than expected. I mean, we were expecting a roadmap to something that looked like an energy deal between the United States and the European Union. We did get something on paper. There was 15 BCM that would be sent in natural liquefied gas to the European Union. Then we hear this, of course, roadmap to a further deal that would go all the way to 2030. So you are seeing a declaration of intentions from the two sides to work together, but also to really diversify their portfolios when it comes to energy. When you look at the political story coming out of this, I would just sum up the words of the U.S. president yesterday. When Vladimir Putin started this war in Ukraine, he was hoping to create disarray. He was hoping to unleash chaos in continental Europe. If anything, now we're more united than we've ever been, and that was echoed to by the Secretary General of NATO, Mr. Stoltenberg, who said, as long as we stay together, we are going to be safe. And the same, I can go on and on and on. The French president said the same. Mario Draghi, of course, told us the same too. But there is still a big question here as European leaders prepare to leave this meeting, which is what is the impact that this is going to have on the European economy? And I can tell you the two words I hear all the time is a potential recession, but also this idea of very little growth, but higher inflation. And of course, that is going to have big repercussions for this economy just exiting a pandemic, but also in an election year with countries like France already up for re-election, but also Viktor Orban in Hungary, and real social tension for everyday citizens that have seen how their cars, their bills, their everyday life is becoming more expensive. I mean, this is a tangible thing. We see it every day.
Maria Tadao in Brussels, Anne-Marie in Warsaw. AMH will touch base with you in about 5 or 6 minutes' time. I know you've got a guest coming up, and we're looking forward to that. Joining us now is G Squared's Victoria Green, Jim Bianco of Bianco Research, and Larry Adam of Raymond James. Victoria, first to you. Is the price of cutting dependence on Russian energy a recession for Europe? Can they avoid that?
I don't think so. Honestly, I don't. I don't think we're going to avoid a recession here. It takes a little bit longer for it to hit. You know, the definition of recession is the 2 negative GDP quarters. You know, we were coming off a low place and still seeing growth coming off the pandemic. But I think if you look at all the price pressures, the inflationary pressures, and the bite that sanctions going to take, the world's getting smaller. It's going to be harder to grow. And so I don't think this is gonna help any situation. I think it's good geopolitically. It's ripping a Band-Aid off. I'm not sure logistically how we're gonna get this done. You know, you're constrained by ports and shipping and what we have on our logistics in the United States, but I think it's a great step forward. However, it's just gonna exacerbate and pour more fuel on the fire of inflation.
Jim Bianco, Mohamed Al-Aaron came on earlier this week. He said depression in Russia. He said recession in Europe, stagflation in the United States. Do you agree with that?
Yeah, unfortunately, I do. And I also agree with Victoria. It's nice that we put together an LNG deal with Europe, but we don't have the infrastructure. It's not as much as just sign a sheet of paper and therefore they're going to get more gas. They'll get it eventually, but it's not going to stop a recession in Europe, or at least a dramatic slowdown at the very least. And in the United States, we're probably looking at drastically higher prices from here. March's CPI could wind up being something for the ages as far as how high it could be. And we're starting to see, we were seeing slowing of the economy even before the war started, and that's only going to exacerbate it.
Larry, to come to you on this, we hear a lot of people present this as a binary choice between prolonging inflation or causing a recession. And this introduces the least bad choice for a central bank. What do they pick, the one or the other? Larry, do you believe it's that binary?
I don't. I think it's a very complex situation. I think, for example, here in the U.S., I actually think we are seeing some inflationary pressure starting to ease. I know it's hard to say it, but when you look at some of the numbers that have been coming out, right, backlogs are being reduced, delivery times are coming down, freight costs are coming down. So that could be one thing that helps this economy. And then I think the Fed, keep in mind, this expansion is only 2 years in existence. And I think they're going to do everything they can to make sure that they can extend it. And I ultimately think that I'm not as concerned about whether it's 25 or 50 basis points for the first leg. I'm ultimately more concerned about where we end up with the Fed funds rate. And I think it's going to be a lot lower than what people think. I'm looking for more 2% because I don't think this economy, because it's so interest rate sensitive, can really absorb rates much higher than that.
Larry, just to put you on the spot, that's basically where the Fed is, implied anyway by the dot plot, the median dot's there at the end of this year. Are you saying that's where it ends?
I think that's where it ends because I don't think, I mean, if you look since 1980 in each successive tightening cycle, that Fed funds rate has come lower and lower and lower. And if you think about it, last time it was at 2.5%. I think we don't get quite up to that. I think it's probably closer to 2% when it's all said and done.
Looking at live pictures of the President, Air Force One just touching down in Poland, meeting in a city not far from the border with Ukraine. Remember, of course, we've had about 3 million Ukrainian refugees since this invasion, and the bulk of them have gone into Poland, about 2 million or so. The count keeps building higher and higher. That's why the President is going here first, and from here he goes to Warsaw, and obviously we'll be talking about security too. We'll touch base with the team in just a moment. Victoria, I want to come to you. The story for me is the outlook. We've cut the growth outlook. We've had to kick high the inflation outlook. Have we done the same for earnings?
Yeah, unfortunately, and I don't like being bearish or feeling bearish. It's a terrible thing because it ruins everyone's lives when we have a recession. I know earnings revisions haven't come down yet. I think we're all going to hold our breaths. I think I'm looking forward. I don't think we're going to see a lot of positive comments in April when everybody reports. I think first quarter might be okay. I think you're going to see more margin pressure though. And then I think you're going to see a dour outlook. You know, inflation is going to bite almost every sector around. The rising rates is going to maybe bite technology and higher growth multiples. You know, how are you going to get your multiple expansion? How are you going to grow in this economy when you're feeling the pricing pressures from labor and from inflation? And it's not fun. You know, I think we may still see this short-term bounce, but we have been almost constant dip buyers for the last few years, and it's worked out fantastic. I've started to pump the brakes on that a little bit. You know, I think we want to be looking at quality, cash flows. You know, we're not really chasing as much risk as we used to because I'm concerned about what's coming down the pipeline. Again, these things take a little bit longer, but hindsight to that, this has been the fastest moving market we've been in ever since the coronavirus. I mean, we had a recession in what, 2 months? And this recovery was supercharged. So when I look at the signals, I don't like it, but I don't like where this market's going at all. And we're advising to be more of a seller of rallies than a buyer.
Victoria Green sticking with us with Jim Bianco and Larry Adam as the President and Air Force One touches down in Poland. We can head back over to AMH for a special conversation. Hey, Anne-Marie.
Hey, Jonathan, thank you. As Poland really becomes the epicenter of the humanitarian crisis, I'm joined by an individual who's dealing with this every single day, the Ukrainian ambassador to Poland, Andriy Deshchetsa. Ambassador, thank you so much for joining me outside of your embassy, where there's been really just a show of solidarity and support with these signs. The West has shown a united front, humanitarian aid coming in. The United States yesterday announced they're taking about 100,000 Ukrainians to the United States. Is it enough?
Not. It's not enough. Of course, we are very grateful for taking care of Ukrainians who are in Poland and for sending humanitarian aid. But what we need is also the military aid, a military that will stop the war.
You were in Poland when there's been this whole debate about those jets going over potentially either the Polish border to Ukraine or a U.S. air base in Europe to Poland. What was the controversy about?
I think that somebody has to be more decisive. Somebody has to take a decision, either Warsaw or Washington, D.C., because we need these jets. We need the jets to close our fly zone, to close the sky over Ukraine, to save Ukrainians and save Ukrainian kids. But it's a ping-pong game. I do not understand why.
So what you heard out of Brussels yesterday wasn't enough?
More or less the same. It's not enough. It's not enough. We need a united front. We need more courage on the side of the West.
The President of the United States will be in Warsaw this evening. Tomorrow will be giving a speech. You'll be at that speech. This is really going to be about the humanitarian effort. More than 2 million Ukrainians in Poland alone. How much more do you expect?
It depends on the warfare in Ukraine. If there are more bombing, more people will flee the country. It could be millions. We already have about 3 million people, Ukrainians, who left it, more than 3 million, who left the country, more than 2 million staying here in Poland. It might be more. And we have to stop this. Humanitarian aid, it's enough. Humanitarian is good. We appreciate it very much. But this humanitarian crisis is a result of the war. We have to stop the war in Ukraine.
There was recent missiles very close to the Polish-Ukrainian border. When you talk to diplomats and you talk to the Polish government here, how concerned are they that this war will extend beyond the Ukrainian border and potentially into a NATO country?
It's still possible. It's possible. They are very much concerned, and people on the streets are also concerned about this. And the Polish government is aware of the developments in Ukraine, and they do prepare the country to the possible invasion, Russian invasion. They adopted the law, increased the number of the armed forces, increased the budget of their armed forces. But I think it's a better way to stop the war, to unite the countries, unite the coalition, give Ukrainians more weapons, and stop the war in Ukraine. Not allowing them to come to Polish border, because it would be unpredictable.
Ambassador, thank you so much for your time. This very important moment. John, that was the Ukrainian ambassador to Poland, Andriy Deshcheta. What he has said, Jonathan, I have heard over and over again from Ukrainian officials in and outside Ukraine. It's not enough.
AMH, thank you. A timely conversation just as the president touches down in Air Force One in Poland. Coming up, the U.S. confident in its current efforts against Russia.
We look at it every day, the nuclear strategic situation, and we haven't seen any reason to change our strategic posture in the United States.
The conversation continues.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
We look at it every day, the nuclear strategic situation, and we haven't seen any reason to change our strategic posture in the United States. We're very comfortable, very confident that when it comes to a strategic deterrent posture, the United States is prepared to defend the homeland as well as our allies and partners.
John Kirby there, the Pentagon press secretary, on the latest. That came from yesterday's interview with Bloomberg's Anne-Marie Hordern. We'll catch up with AMH on a deal struck between the EU and the US a little bit earlier this morning. For the Federal Reserve, some big calls coming in. Fed officials very much on the same page, leaving the door open for a 50 basis point move. The Chicago Fed President Charles Evans weighed in.
General question is, why can't we get there quicker? We still need to have a little time to assess the supply chain, the bottlenecks, what the Russian invasion of Ukraine is going to mean for energy prices. And we want to be careful, we want to be humble and nimble, and get to neutral before too long. Maybe a 50 helps. I'm open-minded about that.
He's open-minded. Mike McKee joins us for more. Hey, Mike.
Hey, John. Well, Charlie Evans is a good Fed bank president, but he is not voting this year. So whether he's open-minded or not doesn't matter as much as the man at the center of it all. and that is Chairman Jay Powell. He told us on Monday that he's open to 50 basis points if necessary. The market ran with that. And since then, we've had a lot of Fed officials speaking, and all of them sort of revolving around Jay Powell, agreeing with him or not, but they really all kind of agree. The farthest anyone gets away from him is saying, I'm open to that, as Charlie Evans did. And you can see where the market went with it. We've almost priced in two 25-point moves, 50 basis points for the May meeting. That's coming up very soon. We'll see what the minutes say in a couple of weeks. But right now, it looks like we're on course for that. There's some data between now and then that will make a difference, perhaps. But as Charlie Evans said, we're going to have an ugly number. So PCE inflation, March payrolls, CPI, those things are going to tell us something about the economy, but probably not change any minds. And here's some news for you, John. Citigroup this morning came out with a new note suggesting we are going to see 4 straight 50 basis point moves from the Fed.
Just a monster call from them, Mike. Stay around because Andrew Hollenhorst, the man behind that call, is going to join us on this program in about 12 minutes' time. To Mike's point, they're looking at 50 basis points in May, June, July, September, 25 basis points in October, again in December, and they're looking for the Fed funds to end in a range of 2.75 to 3% at the end of 2022. Victoria Green, Jim Bianco, Larry Adams still with us. Jim Bianco, let's just start here. Your reaction to that call from Citi?
Well, it's surprising because it's a call that is outside of what the market is pricing in. I mean, Mike McKee pointed out that the market has got a better than 50% chance of a 50 basis point move in May. It also has a better than 50% chance of one in June. And it's got about a 40% chance of one in July. And it's almost priced in 10 rate hikes for this year. The story of this whole cycle has been everybody has doubted the idea that the Fed will be aggressive, and they've all been chasing the market more and more. And it's surprising to see somebody like Citi to finally come out and say, no, we're actually going to go ahead of the market and say they're going to do much more than that.
Your view on the same thing, Larry, please.
Yeah, I mean, I think Jim's right. The market likes this story, right? And everybody gets behind a certain story. You know, there weren't going to be any Fed rate hikes this year. Now all of a sudden they keep, adding them on. I still think that when you look at how interest rate sensitive, I mean, look what's starting to happen with the housing market where mortgage rates have started to go. Look at corporate finance where a bunch of companies aren't looking necessarily to refinance or issue more debt because interest rates are moving higher. I think that this economy is a lot more interest rate sensitive than people think. So I think I'm going to remain in the minority and think that we're unlikely to go above that 2% or so level.
Now, Andrew says it's data dependent. So the first thing we're going to talk about is what kind of data they expect. There's a big call from Goldman in the mix as well. Victoria, I wonder what you think this would mean for the equity market. Goldman have got 2-year yields now, ending the year at 290. They've got 10-year yields ending the year at 270. So basically, they're looking for some mild curve inversion for year end. Does that mean anything to you from an equity perspective?
Yeah, well, I mean, we're already inverted a little bit on the 5-10. The 2's not that far off. And the 30-year, I mean, if you look at how flat that back end of the curve is from 2 to 30, there's maybe 30 basis points that separate everything. I mean, it's going. And the 5-10 is inverted, so it's not great for equity markets. Look, curve inversion is kind of your canary in the coal mine. The Fed is late. The Fed knows it's late, and now we're going to make a policy error trying to fix the problem that they should have tried fixing last year. They're going to probably be too fast in their balance sheet runoff, and it's generally going to spook the markets. I think they're going to do 50 basis points. Why wouldn't they? Inflation's going to be absolutely insane for March. I mean, like we talked about, off the charts number. It can't not be. Look at where gas prices are. Food prices, used cars, new cars, all of these areas that haven't seen any relief. And so I think the equity markets are really going to need to start pricing in that, hey, this is going to be a tightening market. It doesn't mean that growth prospects are gone, but it's certainly going to be the end of easy money, and it might be a harder road to go. And so we want to be in areas that are a little less exposed and a little less growthy, because I think you could see those high multiple tech companies get hit again, because historically when those rates start moving up, that hasn't been really great for those high multiples.
Victoria, take that another step further, please. Are you looking for relative outperformance in a down market or absolute performance?
I think we can, I think value could actually still be positive, but mostly driven by energy, some by financials. So I'm not saying the entire market is going to be a horrible bear market, but I do think you could see growth similar to what we saw earlier this year, that growth could be negative. I'm not super bullish. I think we're going to be very volatile through the end of the year, but I think you could still see gains driven by value, mostly because we're bullish energy, and I don't see prices coming much below 90 through the end of the year, if not staying above 100. And there's a lot of good energy stocks that make a lot of money at those prices.
I'll come back to the energy call a little bit later. Forgive me if that sounded snarky. It's not meant to be. I'm just trying to work out what kind of market we've actually got in absolute terms at the index level. If we get the kind of calls that Goldman are talking about, the kind of calls that Citi are talking about. Andrew Hollenhorst coming up in about 10 minutes' time. Victoria Green, Jim Bianco, Larry Adam sticking with us. In this bond market right now, twos at 220. Up by 6 basis points on a 10-year yield right now, up 3 basis points, just short of 240. So the spread between the twos and tens at the moment, just short of 20 basis points, a 19 handle. Let's call it 19 basis points. That spread is compressing, that curve is flatter. What does that flatness and maybe even inversion year end on twos, tens mean for this market? And what does it signal, if anything, about this economy as well? Up next, the morning calls, and later, the man behind the big call, Andrew Hollenhorst of Citi, on a monster call for the Fed, looking for back-to-back 50 basis point hikes from this Federal Reserve. From New York, this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Away from the opening bell in New York, equity futures positive 0.25% on the S&P, on the Nasdaq up 0.1%. Big moves in the bond market. Let's take a look. A sneak peek, 2s, 10s and 30s. Your 2-year, remember this, closed out February in the 140s, 143. Right now, through 220. A monster move. 50 basis point hike in May, and maybe again, and maybe again, and maybe again. That's the call from Citi. Bank of America earlier this morning saying 50 is the new 25. We'll talk about that a little bit later. Let's get you some morning calls quickly. Argus downgrading Carnival Cruise to hold, seeing a slower than anticipated recovery due to rising fuel prices. Loop Capital cutting its Twitter price target down to 51, growing increasingly concerned about the outlook for growth. And finally, Bernstein upgrading Teva Pharmaceuticals, highlighting its solid balance sheet and growing pipeline. That stock is up by 3.3%. Coming up, Citi and a monster Fed call. Andrew Hollenhorst, just around the corner.
prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
25 seconds away from the opening bell in New York City this morning. Good morning. This Friday morning, we are heading towards a week of gains on the S&P. We add some more weight to the rally, just a little bit, up 0.2% on the S&P. On the Nasdaq, unchanged so far going into the open. Muted price action in equities, big moves in the bond market. Switch up the board and get to Treasuries. Yield shaping up as follows, up 5 basis points to 242, 241.98, and twos through 220. Euro dollar just about holding on to 110 here. Crude pulling back by 2%, more than $2 lower to 110 and about 7 cents, $110.07. That's the cross-asset picture at the opening bow. We advanced by about 0.1% with your movers. Here's Abby.
John, before taking a look at some of the stocks that are helping out the market with a little bit of a bounce this morning onto yesterday's rally, let's take a look at one sector that is dragging, and I'm talking about China Tech. Alibaba leading the way, down 4.4%. Some softening there from the recent bounce. Concerns about earnings and growth slowing on a recent report. Alphabet actually now down just a little bit too. I wonder how that'll settle out as we open up a little bit more. Moments ago, up about 0.4%, but a little bit of a mixed picture here in the U.S. for U.S. tech because of rising rates, perhaps causing some questioning around valuations. Tilray, on the other hand, soaring again, up 14%, surging ahead of a vote on federal legalization of marijuana. In addition to the meme mania as a tailwind, and then Bed Bath & Beyond up nearly 6% with more detail on Ryan Cohen's stake. Earlier this month, it was disclosed that he has a 9.8% stake in the company. Now we know that he has 3 board seats and that the company is considering forming a committee for options on their baby business. Shares of Bed Bath & Beyond up about 5%, John.
Abby, thank you. Citi with the call of the morning, maybe the call of the year so far on the Federal Reserve. This is the quote. We now expect the Fed to raise rates 275 basis points in 2022, and you will get 50 basis point moves in May, June, July, and September, and 225 basis point moves in October and December, and then again we'll make a move through 2023 and end up somewhere between 350 and 375. They say it's data dependent. Andrew joins us now. Andrew Hollenhorst, what a call from you, sir. Let's start here. You've got to call 2 things: the data, your forecast, and the reaction function, how the Fed responds to it. Can we start with the data? What is it in the data that you're seeing in your outlook that brings you to this kind of call?
I think what we're seeing is what the Fed is increasingly seeing, and what's really just evident in the data now, which is that we have broad-based inflation across categories of prices. We have it in the wage data as well across sectors. So we really have a significant overshoot of the 2% target. This is not 4% inflation. This is not 5% inflation. This is inflation that's around 8% and set to pick up closer to 9% in the next monthly reading on a year-on-year basis. And so that's why there's been such a change in expectations for what the Fed will do. This is really a Fed now that is in inflation fighting mode. And when you're in inflation fighting mode, you need to get rates to a level that actually provides some restraint on the economy. So I think that's kind of the big picture, what's behind the change in the forecast, what's behind the change in the rhetoric from the Fed. It's the need for the Fed to bring inflation down.
Andrew, can you talk to me about the balance of risks around your call, the forecast on inflation through the rest of this year? Because I can speak to a lot of people that say they expect inflation to fade and maybe a lot in the second half. Why would you push back against that? And what's the balance of risks around your base case?
So there's reason to think that inflation maybe will come down a bit over the course of this year. But if you think about the big reasons that inflation was supposed to come down, because supply chains were supposed to normalize, because labor force supply was supposed to come back, those stories, those narratives just have not come through in the data. And I think increasingly the Fed recognizes that if you don't have those kind of organic economic drivers of disinflation, then you're left looking at what can bring down inflation. And the only actor that's left is the Fed, and the Fed providing restraint on the economy through tighter financial conditions. So yes, I think we will see somewhat lower inflation readings over the course of this year, but even by the Fed's own forecast, we're ending the year at 4% inflation, and the risks are clearly to the upside with renewed challenges to supply chains, energy prices that are higher. That's very important. Usually we think energy prices higher, that's really just about headline inflation. It doesn't really pass through to goods. Listen to what corporates are telling you. They're planning to pass these costs on through to final prices. This is going to be inflationary, not just for headline inflation, but also for the core.
I'm listening to what the Fed's telling me too, and they're setting up seemingly a 50 basis point move in May. But only a week ago, Andrew, they put out a dot plot with an implied median dot of about 192% year end. You've taken basically their 2023 year end Fed dot and brought it all the way into year end 22. Andrew, what's changed in a week?
Yeah, so it sounds very aggressive in terms of how things are changing, but I would argue it's not aggressive for the circumstances, given that we have the significant overshoot of inflation. It's not that surprising to see the Fed pretty rapidly adjusting to the new outlook, which is for sustained high inflation until you get interest rates higher. I think the important point for the Fed here, if you look at that dot plot, what was really surprising in the summary of economic projections is we had inflation expectations from the Fed projections that came up by something like 140, 150 basis points. You had Fed policy rate projections that came up in the median dot by about 75 basis points. What that means is that nominal policy rates are not rising as quickly as inflation forecasts. And that means that real policy rates are falling. If real policy rates are falling, you're not going to get any restraint on the economy. You're not going to bring demand down. That's not going to cause inflation to decline. So I think that's why we're very likely to see a significant upward revision in those dots as early as the June FOMC meeting, where we'll get a new summary of economic projections. And the other important thing is, with a lot of consensus around going 50 basis points in May, once you've gone 50 in May, I don't see what the argument is to not go 50 again in June, to not go 50 again in July, to not go 50 again in September. Even if you have that 200 basis points of rate rise, you're still only getting back to where the Fed sees some long-term neutral, and we need to go beyond neutral.
So, Andrew, you don't believe neutral is where the Fed thinks it is. Essentially, that's what you're communicating here. You're saying that we can get rates up to close to 3% and that won't even be restrictive. Is that a fair characterization of what you're suggesting?
Right. So again, John, the really important distinction here is between the neutral nominal rate and the neutral real rate. What the Fed forecasts say in their long run is inflation is running around 2%. Nominal rates are around 2.5%. So subtracting 2% from 2.5%, that's a neutral real rate of about 50 basis points. Well, if inflation is running, by the Fed's own projections, at 4%, you would need policy rates to be at 450 basis points to get to that same level. So, again, when we're talking about policy rates that are getting up above 3.5% in 2023, I don't think that's aggressive given the current inflation outlook.
Now, year-end 2018, you remember where the constraint came from. It wasn't in the economic data. The market just said, no more, you're done. And they were done, and they had to back away. Andrew, does that become problematic for your call? Do you have a call on financial conditions?
I think that's really important, John, and I think that's part of why we've seen some of the more hawkish rhetoric after last week's FOMC meeting. So we remember last week's FOMC meeting, dots came up more than expected. It was a hawkish meeting in our view and a lot of people's views, but the equity market was higher on the day. And I think if you're a Fed official and you're looking to tighten financial conditions and you see equity prices that are moving higher, even as you make a move that maybe you thought was going to be perceived as hawkish, well, that shows you that you need to push even harder. So that is important. If you get equity prices down 20%, 30%, that would be a significant tightening of financial conditions, and maybe they could pull back. Then maybe we will get less rate hikes if you get that kind of tightening from other aspects of financial conditions. So it's the whole picture that matters. It's broad financial conditions that matter. And so we'll be watching all of those things.
Andrew, one final question from me. One thing that I don't see in this call is balance sheet reduction. I've heard some big calls from the likes of Bank of America, Deutsche Bank, looking for something close to $2 trillion from the date it's announced through to year-end next year. What is your call on balance sheet reduction, and how does it connect with what you're calling for with rates?
Yeah, so we can get around those numbers on balance sheet reduction. It's a really important thing to mention. This is probably going to be announced in May, probably starting in June. I think that's the consensus. Consensus also, like you said, that it comes down relatively quickly. When we're talking about financial conditions, and we're talking about how they affect the U.S. economy, you really think about things like mortgage rates, corporate borrowing rates. That's how interest rates actually get through into the economy. That's about a longer term interest rate. That's not about an overnight interest rate. So you could argue that we should be talking a lot more about the balance sheet and a lot less about policy rates. I think the issue for the Fed is that the comfort is just not there with the balance sheet. So at least for now, the active tool, and in our view, the very active tool, is going to be the policy rate. Yes, this will happen with the balance sheet, but the marginal change is going to be on upping the hawkishness of the policy rate path.
Let me throw in a naughty question, and I hope you take it in the spirit of which it's intended. Andrew, there are some people who believe that Wall Street is sort of trapped in this kind of wrestling match with itself, trying to outdo each other on rate hikes and what we need. What do you make of that?
Yeah, I think it's a fair question, John. There's always a question, is the forecast that we're seeing a true forecast of what's likely to happen? Or is this kind of, comparing forecasts across shops and, trying to, what we try to do at Citi, and I really think most of my colleagues across the street, we're watching the data. We're trying to get this right. And what we see, quite frankly, is just a lot of inflationary pressure that's probably not going to abate unless you get rates significantly higher. And that's what guides our forecast.
What a call. Andrew, thank you, sir. Andrew Hollenhorst of Citi, an outlier call. And when you get an outlier call, what do you get? A ton of pushback, as you might expect. Jim Bianco, Larry Adam, Victoria Green, still with us. Victoria, let's say that Andrew and the team at Citi are right. Let's say that you can get rates up close to 4% year-end next year and close to 3% this year and throw in close to $2 trillion of balance sheet reduction too. What does the market look like?
I think Citi just told my market to hold my beer and watch this. I mean, I think it's going to be a wild ride. 50 basis points again and again and again. That's obviously well above consensus, and shock is never a good thing. Whenever you see a more hawkish than anticipated, it's typically when expectations and reality don't align up is where you see the most equity shocks. So if that happens, I would not really think it bodes well for the equity market. I would think growth gets hit harder in small caps. And I think that means the rest of the world is also going to hurry up. Everybody and all the central banks are watching each other. So I think this would make Europe move faster, and it's probably going to put more pressure on the dollar. And we see it has a pretty big trickle-down effect. I don't argue with what he was saying. I think he has a valid thesis. I don't think they're going to be that aggressive. I do think they're going to balance sheet run off a little faster. But I do think bull markets are killed by policy error, and this is lining up to be a big one, because I don't think the economy can withstand that. I know we've got record low unemployment, but look at the supply chain problems. Look at what's happening with prices, and how is the Fed helping? The only way the Fed helps with inflation is to cause a recession. That's I don't mean to be glib about it, but that's the only way you stop inflation is a recession.
Jim Bianco, your thoughts on what you heard, and to the three of you, thanks for being so patient as we work through it. I think it's important to work through a call like that. And Jim, by definition, it's a forecast. A forecast by definition can't be wrong until, of course, it is. But that's the view from one bank for this year. What's yours?
Yeah, my view is very close to Andrew's view in terms of that forecast. I think what Wall Street has had the hardest time coming to grips with, I'm going to respectfully push back on Larry here, is growth is not the priority of the Fed anymore. And it is inflation. And they're going to hike and hike and hike until the inflation rate comes down. And if they're going to risk a recession, they're going to risk a recession. Chairman Powell has already said there's 1.8 point jobs for every unemployed person. The stock market's going up. I agree with Andrew. They go 50 in May. That's the new hike. They're going to keep going 50 and 50. And call me when we get to 3% in inflation, and then they'll stop. I'll remind you, I've said this on this show before, 40% of the American public has less than $1,000 of savings, and they rent. They're getting killed by inflation. It's showing up in the political polls. The Fed hears this. They hear this loud and clear, and they're going to side with trying to do something for the 40%. They see all those extra jobs. They see the stock market going up, and they say, we can go and go hard because we have to, at least, if nothing else, show the appearance that we're trying to do something about inflation.
Right now, the bond market's on board. I mean, let's sit on that just for a moment. We've got an 11 basis point move on twos. Twos have gone from 140-something at the end of last month to 225. Right now, we're looking at an 80 basis point move for this month alone. I think it was Jim Reed of Deutsche Bank earlier this week who put in his morning note that this could be one of the biggest monthly moves on a 2-year yield, going all the way back to 2004. And Larry, to Jim's point, and to Andrew's point for that matter as well, and Victoria, who agrees with him to some degree, this is happening. And equities, pull up the equity screen, equities aren't collapsing, are they? On the S&P 500, financial conditions haven't tightened aggressively through this month so far. So, Larry, why can't the Fed engineer the kind of tightening cycle that Citi are talking about?
So, look, I think the economy is very healthy right now. I think the one thing that Jim mentioned, and I agree with, is that the average consumer right now is losing ground, right? It sounds good that everybody's making, on average, $200 more per month, but that quickly gets eaten away by the increase in gas prices. That's costing people on average a little bit more than $60. The increase in food prices, up about $90. And then you throw in rents, you're underwater. And the big key will be, can we continue to raise or have job creation to offset what people are going to take away from their savings? I don't think the Fed's going to want to do anything to reduce the confidence and the hiring practices of companies. And they're going to try and keep this economy going because, again, we're only 2 years into this expansion. And if we get into a recession, we're going to have a whole nother slew of problems that we're going to deal with as all of a sudden, tax collections start to ease. So I think they're going to do everything they can.
Larry Adam, Jim Bianco, Victoria Green, to the three of you. Fantastic conversation. When will the Fed be done? The last time we had a rate hiking cycle, it was the market that told them they were done. Any different this time? Coming up, the US and EU striking a deal to help Europe replace Russian gas.
The United States welcomed the European Union's powerful statement earlier this month, committing to rapidly reduce its dependence on Russian gas.
The president going from Brussels to Poland, touchdown. We'll be talking about that in just a moment. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The United States, together with our international partners, we're going to work to ensure an additional 15 billion cubic meters of liquefied natural gas, LNG, for Europe this year.
The US committing to help cut Europe's dependency on Russian gas. EU Commission President Ursula von der Leyen solidifying.
Get rid of it. We want, as Europeans, to diversify away from Russia towards suppliers that we trust, that are friends, and that are reliable.
Back with us, I'm pleased to say, Bloomberg's Anne-Marie in Warsaw and Maria Tadeo in Brussels. Just as the president touches down in Rzeszów just moments ago in Poland, that trip ongoing. Anne-Marie, I want to start with the gas deal. First of all, run me through just how big this actually is, how ambitious these goals are of the Europeans.
Well, listen, the United States has been trying to do this, Jonathan, for weeks. We've seen them have this outreach to a number of gas suppliers to make sure they could try to fill that hole if President Putin was going to start to play politics with natural gas. But if you look at the numbers, it is a very tiny step. 15 billion cubic meters is what they're trying to do. That just means that could fill a hole for Russians' LNG imports, liquefied natural gas. As a whole, in terms of natural gas, Russia imports to the Europe 155. So they're basically just trying to fill a hole of just under 10%. So it is a tiny step forward when you look at just how reliant, once again, Europe is when it comes to Russian natural gas.
Maria, how successful was this trip? And I know it sounds cliche. We often ask this on shows like this one. How do you define success? How would you define success in the last 24 hours?
And Jonathan, you're very right. When you get a full day of diplomacy, a lot of this is done for show. It's done for the cameras. Ultimately, this is Brussels, and Brussels lives of politics and the glamour around it, if you will, to get every leader here to take a picture, and all of them will tell you very nice words. And I would argue, in many ways, the symbolic nature of this was important. They wanted to show, first of all, unity, but also strength. And we did get that yesterday from NATO. We did hear from both the Secretary General and of course, from the President of the United States, very much echoed by the European leaders, that we're as strong as we've ever been. If we stay together, if we stick together, we are going to be safe. There was also this very clear warning to Russia, do not use chemical weapons, otherwise it will change the nature of this war. And again, another very thinly veiled, but nonetheless, their warning for China, saying we trust that you will take the right side on this and really not help Russia on the military front. But when you look at the actual details of this, as Anne-Marie said, this LNG deal, it's tiny. It's a fraction of the energy problem that Russia and the European Union have at this point. When you look at the biggest hot potato here, which is who is going to help Ukraine politically in the future, will it join the European Union or not? We got no clarity on this yesterday. Once again, when it comes to the political debate about a diplomatic way forward, when it comes to Russia and the war in Ukraine, well, we did not get a lot of detail on that. When you ask officials that we have been for the past 2 days, how will this end? What is the end game? They still don't know. And the concern concern here is that, of course, the war could get more brutal, and we are already seeing that reflected in places like Mariupol, the way that the civilian population has been treated, horribly treated, for 2 weeks. So this is a story that in many ways continues, and it's not for the better. At this point, it really isn't clear what the diplomatic solution to this war is. And when you speak to the Ukrainians, we're about to speak to a senior official very close to President Zelensky, they still tell you the way we view this, it's an existential country for a country, and we're not going to give up. Ukraine will not surrender just like that.
Anne-Marie, the president just hitting the tarmac. Talk to me about this. We have discussed things at NATO. We've discussed things at the G7, European Council meeting as well. Can you talk to me about how unique this moment is between the President of the United States and the Polish president?
Well, first off, Jonathan, it's starting off a little bit delayed because the Polish president's plane actually had to be diverted to Warsaw. We had to switch to another plane. So the President of the United States will be landing in Poland, in that border town, before actually the Polish president is there. This is really a twofold moment. One is the humanitarian effort. This is the more emotional part for the President of the United States. More than 10 million people have been displaced in Ukraine alone. More than 3 million people fleeing to neighboring countries surrounding Ukraine. Poland being that epicenter, more than 2 million, Jonathan. And even in the streets, you can see the outreach of the Polish people to the Ukrainian refugees that are coming to Warsaw. And I'm just outside the Ukrainian embassy in Poland that is dealing with this influx. Then, Jonathan, there's going to be a little bit of a diplomatic tightrope for the president to walk. This is a populist leader, a populist government. They've had a lot of criticism in terms of the judiciary here, in terms of that independency, also as well as rights about the LGBTQ community, as well as the independence of the media. So this has been kind of a fringe country when you look at how its relationship is with the European Union. At the moment, it's even fighting with the European Union for some of that COVID relief funds, given what is going on here in terms of the illiberal values that you're seeing out of this government. But now you do see the world rallying behind Poland and really giving it kudos for what has been going on, given how much of outreach Poland has had for this humanitarian crisis.
Anne-Marie, I think the final question we've got to talk about is military hardware. The Ukrainians are still asking for help. We know that there has been the offer of assistance on things like fighter jets, and you spoke to John Kirby of the Pentagon yesterday. Can we finish there? Whether that comes up in conversation in Warsaw and where we are in that debate at the moment.
So from the beginning, the Polish really kind of took the Americans by guard by saying, we're going to give these MiGs up, but we're going to put it to a United States military base in Europe, and then they can be the dispatch. And John Kirby yesterday, Admiral, he's the press secretary for the Pentagon, said that Poland can do that, but they had an issue with coming in from the U.S. air base. What I just heard yet again from a Ukrainian official, the Ukrainian ambassador to Poland, was enough is not being done. The humanitarian effort, the diplomacy, all of this is welcomed, but what they need is more military support. And without that military support, they won't be able, Jonathan, to stop the humanitarian crisis that a country like Poland right now is dealing with.
Bloomberg's Anne-Marie in Warsaw alongside Maria Tadeo in Brussels. From here, the president in a city very close to the border that Poland shares with Ukraine. From there on to Warsaw, where Anne-Marie is, and full coverage through the day with the Bloomberg team worldwide on TV and radio. For our audience worldwide, a big move in this market too, not in equities, but in bonds, and a big call about what the Fed will need to do as well in the face of a war in Europe. From New York City, this is Bloomberg.
Bloomberg's The Open is brought to you by...
you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, Pepsi goons bomb their own trucks. And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them, to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance, they say, is to build up pressure on Pepsi. And so you see people marching in the streets. So we had mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complications due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack at the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Benegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Benegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Benegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Weinergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there, like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is, when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small and space is really big. And then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. Asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter. It's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities and the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't. and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people like want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech and write-up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just like attacked that video and were like, you explain things so much better than my boyfriend or my professor, or like I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You know, you do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of, squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now, clearly, this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen-grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwit, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350.
Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that They're interested in how retail brokerages make money and whether they're keeping the best interest of their customers in mind. But it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Meet Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
Usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1,
and other times it'll drop down to about 0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally a few miles away from downtown, and it just cuts off.
This is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed harmony. You have.
Americans on average pay about $70 a month for internet at home. But in rural areas, it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing, Google in the morning, and marching, trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
One of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we went out to seek venture capital.
Then, in March of 2020, the pandemic hit the world.
Everybody got locked down, and everybody came home, and everybody started using the internet. And I remember seeing on one of the local fixed wireless providers' websites, they've said, hey, we know you're all staying home, but please don't use too much video, and please don't use too much bandwidth. And I thought, that doesn't work.
The U.S. connectivity gap is far greater compared to countries that are considered its peers economically. Some developing nations actually have better internet than rural America, like in Kenya, which has a state-of-the-art fiber optic network fed in from their coastline. The American connectivity gap does largely affect rural areas that are either outside of service coverage or simply prohibitively expensive. This is Rebecca. She and her family moved to Nevada County just a couple miles down the road from David. They took for granted that high-speed internet would just exist in the area, and it's not something they even bothered to check on before buying their house. Turns out, all they got was dial-up.
We wanted to move where we had a little more space, room for the kids to run around, just be out in the mountains a little bit more. Having come from a bigger city area where Wi-Fi is pretty readily available, we hadn't really considered that in our purchasing of the house, whether that would be an option or not. When school started, and now that we are remote learning with our children and we're doing everything from home, we didn't have the option to do that at our house. So every day when school would start, we'd have to pack the kids up and we'd go to my in-laws' home. They have a little cabin up in this area that does have Wi-Fi already.
Rebecca's situation is the norm in rural America.
According to data from the Federal Communications Commission, just 4% of urban Americans lack access to broadband internet. That's compared to almost 40% of people who live in rural areas. But while that was the case, there were also racial and socioeconomic divides in terms of who had that access. In addition to that geographic difference, low-income African American students, Latino students, and first-generation college students were more likely than others to have only one device at home that's shared among multiple siblings and or lack access to that actual connection.
For most American towns, there's also a lack of competition, forcing internet prices up. And large providers like AT&T and Comcast aren't incentivized to expand service to these rural communities.
This is how Xfinity makes life simple, easy, awesome.
So in our area, we have a small imprint of Comcast, but they're not going to go out to the more rural areas. It's just not cost effective for them to do it as a large company.
In order to lay fiber cable, you're actually physically digging trenches into the ground. And for internet service providers, they're primarily focused on maximizing their profits. And so the fewer customers you have, in any square mile and the more fiber you have to lay, that's just kind of harder to pencil out from a purely economic standpoint.
AT&T released a statement on the matter, expressing the need and desire for government assistance to fund fiber optic expansion to areas deemed unprofitable. Comcast released a similar statement encouraging more public-private collaboration on this effort. Federal agencies do offer grants to help communities build broadband networks, but many have argued that there's not enough flexibility on how to use these funds. The COVID-19 relief package passed by Congress in March and signed by President Donald Trump awarded $43.3 million to 51 projects on the East Coast alone. But it also stipulated that these projects needed to be up and running by December 30th. For contractors who plan projects months and years in advance, it's a scramble to rearrange their schedules to meet that deadline.
So what we've been asking the federal government to consider is at least have, as long as the projects are getting started, knowing the projects are being put into place to expand both remote learning, working from home, and opportunities like that that are truly driven from COVID. We're moving as fast as we can regardless, but hopefully they'll give us some more time.
Talking to John Paul, it's clear that he believes broadband is something that can transform a community and should be considered a public good.
One of the first communities to come on in the United States with full-on gigabit service was Chattanooga, Tennessee. Now, they're a bigger city, but they're a city that was economically in a downturn. In the last 15 years, the city of Chattanooga has turned around in an amazing way. It's a nexus for young people to move to. It's a place where technology happens.
It's not just about logging on to Zoom, to connect with your colleagues who might be in New York City. It's also your ability as a small business, operating in the town of Nevada City or wherever it may be to, quickly upload your payroll documents or something onto the cloud, or to quickly, swipe a customer's credit card. There's just some really basic business functions and mechanics that I think people in big cities really take for granted, and that are just going to be a much bigger challenge for small business owners in rural areas.
Historically, the marginalized people, you call them as untouchables or Dalits, they have been kept away from the center of the knowledge. Once you are born into a caste, it is very difficult for you to grow beyond that. You are stuck in that identity. I think education is the best way of liberating them. So that's how I chose to work in education sector. The kind of education that we are giving to the marginalized people is going to change not just the fate of these communities in Telangana, but it is going to be the source of inspiration, source of hope for all the marginalized in this country.
greatest blight in India is the system of caste.
For generations of Indians, the social code known as the caste system has defined how people earn a living and whom they marry. Although outlawed 7 decades ago, castes remain a significant factor in deciding everything, from family ties and cultural traditions to educational and economic opportunities. Dalits, people who are on the lowest rung of the caste system, constitute almost 1/5 of India's population of 1.3 billion. Not able to afford the high tuition of private schools, many are forced to attend government-funded institutions, which in the past have suffered from poor infrastructure, lower education standards, and high student-to-teacher ratios. But Dr. Praveen Kumar is trying to change that.
I am currently working as head of Telangana Social Welfare Residential Schools. So totally above 400 schools I manage. These are all residential schools for the students who are historically marginalized but talented and then poor.
My friend also
Of them, 60% are girls and then 40% are boys, because girls are more marginalized among the marginalized. Their voices are always suppressed. My approach to improve the conditions in the schools has been put your eyes and ears on the ground always. Talk to the parents, talk to the teachers, talk to the students, stay in the schools and then understand their problems, their challenges, both in classrooms and then the corridors and the dorms. Then go to the dining halls and see what kind of food they are eating, and then go to their homes and then what kind of food they are getting and what kind of challenges the parents have. One of the important changes that I brought in after I took over was to complete the transformation of mother tongue to English medium, because English medium, as I said, English is the language of emancipation, a language that connects you to the whole body of knowledge in the world. So we had to train a lot of teachers.
Refer to the dictionary also, okay, and find out the new meanings. As well as describe about. Hey, Richita, how are you? Hi, Sindhu. Fine, thank you. And how about you? I'm fine too. It's been a long time.
Identity is extremely important. There is a scientific evidence to prove that your sense of identity is extremely crucial to your growth as a successful human being in your life. If you accept an identity which is very humiliating, which reminds you of very painful past, I think that identity will not help you to grow. I'm not saying that you should forget your past. I'm not saying that, but that should not be the bubble in which you must live always. Sweros is an alternative identity. S stands for state, W stands for welfare, Aero, SW, and then Aero is Swero. So the idea is your dreams have to be skybound. So that is what we are trying to achieve by changing the identities. Like, we say, I'm a Swero and I aim to be a doctor. I am a Swero, I aim to be a top-notch engineer. I am a Swero, I aim to be a top bureaucrat of this country. I'm a Swero, I want to be a very good actor or a musician in this world. So these are the positive images that are associated with the identity. Just to give an example to you, in 2012, in our institution, we used to produce about 6 doctors per year. But because of our, this self-liberating ideology of Sveroism, we have, this year, we have produced about 189 doctors. This is phenomenal for any poorest of the poor people. You know how difficult it is to get into medical colleges in this country. So, but today, because of this ideology, the students have been able to achieve this, feat. Pujita has been a farm laborer And the parents themselves are agricultural laborers. And then this girl used to sell vegetables, but thanks to the residential education institutions, she came to the Gauli Doddi campus, and then she toiled very hard for 1 year, despite many problems. And today, I'm so happy to share with you that she has joined one of the prestigious medical colleges in the state of Telangana, Usmania Medical College, and then in future, she hopes to be a gynecologist. So this is the journey our children are hoping for. Similarly, the Mount Everest expedition. At Mount Everest expedition, we are very fortunate enough to place the youngest ever female in the history of this world on the peak of Mount Everest. How did this happen? It's all because of an ideology that helps you to liberate yourself. We brought a lot of extracurricular activities and most of them got institutionalized now. So for example, music. Similarly, the games. We have so many coaching academy. We have boxing academy, we have wrestling academy, we have handball academy. So we have, kabaddi, the traditional Indian sport. We have golf. We have introduced the golf also. Like golf is generally played by so-called rich people, but today even poorest of the poor people also are being trained in golf in our schools. Wow. So our intention has been to give all 360 degrees, type of opportunities to the students, so that whoever is interested in whatever activity, they can go and then do it. Break the barriers, break the fence, at least mentally, because poor people have been programmed to be victims, programmed to be subjugated, programmed to be on the margins, always, programmed to feel inferior. We wanted to change on that. There are certain games which are exclusive to rich people. There are certain languages which are exclusive to middle class and upper middle class in this country. To put it in one word, the sole aim of introducing all these co-curricular activities is to break the stereotypes which are recklessly imposed on these people.
They're stereotypes Dr. Kumar knows all too well. Born a Dalit, his grandparents were labourers and access to the village well was restricted. Dr. Kumar credits his parents' belief in the power of education with helping him realise his aspirations. He went on to join the Indian Police Service, attended Harvard University, and then began pursuing educational reforms back home.
I attribute whatever I am today, it's to my mother primarily. They educated me in the village, although there were no good schools. So then I stayed in social welfare hostels, the hostels which are managed by government for the poorest of the poor kids. I passed with reasonably good grades. Then I went to university, and then I faced worst form of discrimination in the universities. Like there were, in those days I'm talking about, so the bathrooms and the toilets were exclusively meant for scheduled castes and scheduled tribes. We used to fight discrimination on one hand, and then again, try to excel in academics, day in and day out. So that's how I came to education, because I deeply believe that education is the only important weapon that can really, place the poorest of the poor people from a very victimhood orbit to a prosperous orbit. I think in future, this is going to be a game changer for the marginalized in this country.
If you look at a thermal image of a city and then compare that to a map of vegetation, you'll find that where there's greenery, the temperature is lower. That's because things like asphalt, concrete, and shingled roofs absorb more heat from the sun than trees. This is the urban heat island effect, and it accounts for higher temperatures in cities, often by several degrees compared with their surroundings. It's becoming a huge risk to human health as growing urban populations exacerbate the heating effects of climate change. Heat waves kill more people than any other extreme weather event, more than tornadoes, hurricanes, and even floods. That's why urban heat island mitigation strategies are being studied in Singapore by a group of researchers. The government-backed project called Cooling Singapore is now in the process of combining everything they've learned to create a digital tool that can help cities all over the world, starting with Singapore. In Singapore, close to the equator, temperatures regularly rise above 32 degrees Celsius or 90 degrees Fahrenheit. And the city structures only make it worse.
And that is also the case for Singapore, which is basically a concrete jungle, more urbanized, more developed city. And even in Singapore, what you have is a situation whereby there's a temperature difference of 7 degrees Celsius between the more urbanized and the more rural areas.
The government has taken drastic steps to keep temperatures down. This is Gardens by the Bay, an award-winning park. And inside this greenhouse is a pleasant 24 degrees. That's because the dome, along with 24 nearby towers full of thousands of people, is chilled by what's probably the world's largest underground district cooling system. It uses a large central plant that cools water and then pipes it into banks, residential towers, an exhibition centre, shopping malls, and the city's iconic Marina Bay Sands hotel and casino complex.
So one of the biggest perks of using this system for the buildings is that they can save 40% in terms of electricity usage compared to your traditional air conditioners.
And with Singapore relying on natural gas for most of its power, this new system means emission savings equivalent to removing 10,000 cars from the city's roads. That has big implications for the rest of the world. If things stay as they are, more than a third of the world's electricity could end up being used to cool buildings and vehicles by 2050.
As the world gets hotter, gets warmer, there is a greater need for air conditioning and as well as refrigerators, for instance. And the more people are buying these household appliances, the more energy usage they use, and they release heat more, and that then exacerbates climate change.
It's a vicious circle. And so since 2017, researchers at Cooling Singapore have been identifying design solutions that reduce our need for so much cool air in the first place.
One thing many cities have in common, and that's the importance of vegetation. That's a very important measure to mitigate the urban heat because of the shading effect, of course, and the psychological effects of the vegetation, and also because of the possible evaporative cooling effect of the vegetation. Vegetation can be, of course, on the ground floor in form of trees and shrubs, and you can walk under them. This is the so-called canopy layer that the vegetation forms above us. But vegetation can also go up the facades of buildings, and it can go to the roof of the buildings.
Luckily, Singapore has been striving for the garden city feel for quite some time. It was a vision initially introduced by then Prime Minister Lee Kuan Yew in 1967 to make life more pleasant for people. And today, Singapore is one of the world's greenest cities in terms of urban vegetation. Kampung Admiralty, a community centre that contains health facilities and social spaces, now provides more green space than the plot of land it was originally built on. It's topped by a roofscape of staggered terraces covered in local plants, which functions as a community park. And a village green in the centre that contains farm plots for residents to tend to. Park Royal on Pickering was designed as a hotel in a garden that doubled the green growing potential of its site. There's now 15,000 metres of sky gardens, reflecting pools, waterfalls, planter terraces and green walls. And the government has big plans as well.
Singapore actually has a plan to plant 1 million trees and add more green spaces over the next 10 years. It is actually a mix of wanting to reduce the urban heat island effect, but on the other hand is also to get the people to be more connected to nature.
But it's not enough. The city-state has still been warming twice as quickly as the world average over the past 6 decades. That's why Cooling Singapore has developed a catalogue of other potential heat mitigation measures.
When you try to mitigate the urban heat island effect in a city or in any building, in a village as well, the first place to start is by shading of the windows. You have to keep areas clear so that the wind can move through it. Water of a certain depth can act as a very good thermal buffer. If you have to construct heavy buildings such as high-rises, at least you can make the surface, the facade, less heavy, and you can protect it from direct sun penetration. You have to make sure that no combustion engines will be in the city in the middle, in the medium to long-term range. So ideally, the electricity production is outside of the city, and you bring just the clean electricity into the city. You can at least minimize the use of energy in the city, and you can start to slowly convert the roofs, the facades of the city into production areas for renewable energy. In Singapore, unfortunately, this is a limited option, but in the long run, it could produce up to 20-25% of the energy, of the electricity needed in Singapore if all the roofs and the areas in the buildings, on the facades would be used to do that.
With so many different ideas, Cooling Singapore is also designing a virtual model of the city to test them out. It's called a Digital Urban Climate Twin, or DUCT, that will calculate how each element of the city's design will impact the urban heat island effect.
That means we model not only the geometry of the buildings digitally, but also we model the transportation, the insulation, the temperature, the radiation coming from the sun, the weather, the local climate, the even very, very microclimate of the city, the water, the movement of people in the city. We can invent scenarios, we can design scenarios, test them before we actually build them, and if they test very well and we are sure that they will function, then we can start to build them and put them into reality.
Singapore will be using this new tool to figure out which actions it should take next. And the model can be applied to any city, whether it needs to keep heat out or keep heat in, which will ultimately save energy, slow climate change, and improve our quality of life.
So this is something that Singapore will be able to export, maybe even together with its city development systems that it already has. Singapore is one of the very few cities in the world that really combine this scientific approach with a very well-established urban redesign and urban design approach. Through its agencies and the combination of its agencies, it has achieved a lot in the past. If it keeps following the scientific path and the combination with the other knowledge in the city already, we think that it will be a very comfortable and very livable city in the future, even more than today.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage, and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel?
1, you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges, or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you posted on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You got to make it a little more exciting. All right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while, and I think a majority of people burn out prior to getting to the like profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is live stream shopping, one of the hottest trends in China. Every night, tens of millions of people watch live shows hosted by influencers like Via and buy the products they recommend. On e-commerce and social apps like Taobao and Douyin, the sister app of TikTok.
我觉得已经改变了大家的购物的方式。其实各种各样的产品，哪怕你不买，你也可以来看。当然，你看了你就有可能会买。
It's not about, only shopping. It's about the experience. It's about having fun. You got to see 3D. You got to see in some kind of action. It's almost like a theater act.
The internet craze has taken over China. By the end of 2020, the country had almost 400 million live stream shopping users. China's live stream e-commerce market has also grown dramatically, with an estimated value of $161 billion in 2020. It's becoming popular outside China as well. So, is live streaming the future of shopping? Live streaming is not a new thing. In China, it started in 2015 with the rollout of 4G. And it was first used for entertainment and socializing. Many live streamers performed for their followers or chatted to them, making money by receiving virtual currency and gifts. In the West, live streaming is mainly the domain of avid gamers. In China, it's broken into e-commerce.
China actually has a very big e-commerce empire, so it uses these super apps, what we call, that you have payment, you have search of information, you have recommendation system, and you have huge amount of goods available on the platform, and as well as a lot of consumers. So with this advantage, they merge these features of live streaming to make the influencers actually sell goods.
Here is a perfect choice. Nice neutrals, beautiful print, nothing overwhelming, and the warmth and comfort of flannel. This is item.
Traditional TV shopping involves a one-way direction, whereby a host introduces a product, demonstrates certain things, and say, call this number or something. But live stream shopping is live. That in itself is a very, very big difference. It causes different psychology. And live stream shopping is a very entertaining way of actually engaging someone else.
When you shop, actually, this live streaming video will continue. It will minimize into a corner, and you can buy the items and pay all on the same app. And after that, the live streaming screen will just enlarge by itself, and the promoter will come back to screen. So it's very convenient.
Taobao, one of China's biggest e-commerce platforms owned by tech giant Alibaba, added a live streaming function in early 2016. In the following years, other e-commerce and social platforms like JD and Douyin also integrated this feature.
开头的时候还是有很多的挑战的，对画面的这个流畅，然后是否能够很真实的去还原商品，它其实在这个上面是有很高的这个门槛跟技术的这个卡口在的。
不管是我们的这个用户的接受度，还是商家的这个上手的这个难度都很高，但是这几年下来，基本上难点在不断被突破的。
Over $70 billion worth of goods was sold via live stream on Taobao in the year through March 2021. Latest surveys show that over 60% of live stream users in China were watching shopping shows, and over 65% of them shopped at least once via live stream. In 2020, live stream shopping got a huge boost during the pandemic, when millions of people were in lockdown and many retailers were pushed online.
People, during the lockdown, felt like there's a need for more social interactions. This live platform creates an interesting kind of environment that gives people the sense that I'm actually interacting with you. And then live stream shopping brings in a lot more variety of things that people could buy and satisfy, the sense of like losing control, especially during the pandemic.
At the heart of this craze are the top influencers who have tens of millions of followers and sell products worth millions of dollars every night. They often use their star power to get bargains from retailers, which in turn boosts their own sales and influence.
So if you think about China's live streaming, you have to know the king and queen of the influencers. The queen of live streaming, Via, she is actually having the biggest viewership and the biggest sales volume for a long time on Taobao platform. She can sell everything from like Gucci sunglasses, lipsticks, homes, and cars. One time she offered her followers to go on a Tesla ride with her, and she even, for once, sold a rocket launch in her live streaming room for 40 million yuan. The king will be Li Jiaqi, more widely known as Lipstick's brother. He used to be a cosmetic sales before he turned into live streaming e-commerce, and he knows a lot about the cosmetics. So he's the one that will actually put the lipsticks on himself when he's on the show.
Top live streamers like Via and Li Jiaqi have become celebrities in China and can earn millions of dollars a year. Although not everyone can be as popular, mid-ranking live streamers like Tiffany still earn a good income through sales commissions.
如果说单从收入方面来讲的话，那主播的收入是比普通的工作要高很多。但是呢，主播这个工作时刻对身体，包括对精神都有很大的一个考验的。就是每天需要集中精力，然后长达5-6个小时，这种状态是很累的。而且这5-6个小时的话，你是脑子是不停的，然后嘴巴是不停的，然后手也是不停的，眼睛也是不停的。像我们做主播，不是说单一的只做直播一件事情，然后还会有选品的一些工作，然后还会有一些其他的事情排在里面，其实是没有个人生活的。那我觉得增强粉丝影响力的话，不是说某一件事情。可能今天做了什么事情你就增大了影响力，而是每天不断的内容的输出，粉丝不断的可能对你的了解，慢慢的信任你。
里面有芝麻酱的味道，如果吃不习惯的话就慎买。
A lot of successful live streamers are generally very good at communication. They're very good at articulating very simply what a product does, what a product doesn't do. In order for them to sell, they need to be trustworthy and appear trustworthy, and they need to, show in some ways that they're authentic, right? So for Via and Li Jiaqi, they are able to articulate that quite a bit through their body language, through what they say. For example, Li Jiaqi will also sometimes say bad things about certain products because to him that's his honest opinion, and sometimes people want to hear that. And so they seem very credible, they seem very trustworthy, and don't forget, they're also very entertaining and very interesting. If you're familiar with Li Jiaqi, he won a Guinness record for like the most lipstick applications to models in like 30 seconds. So if you're able to create a lot of buzz with interesting things that you do, people who may not want to buy lipsticks will also stream in just to watch what he does. And then from there, you might get hooked.
这就是一般女生出门的时候涂的口红的颜色。
Live streamers also use sales techniques such as limited time or supply. This sense of scarcity can often encourage viewers to buy.
The platform in itself creates and enhances some of these things because you see it live. Something we call social proof has taken over, meaning that, hey, other people are interested, other people are joining in, other people want the same product. and they add it in the chat and they ask questions and they say, oh, I want this too. What happens then? It makes the whole product even more scarce.
But it's not just influencers. Local farmers, luxury brands, even mutual funds have also started their own live stream shows.
Working with very top-tier live streamers can be risky. It's not necessary that the benefits will end up with the brand. So we see company executives opening their own shows. And we see like P&G have their own sales room, which runs shows every day as well. We also have like local governors in like small towns to sell their agricultural products. So the live streaming is definitely transformed the way product owners can think about how to reach their consumers. And it enables a lot of players to actually sell.
Live stream shopping is going global. Merchants in Southeast Asia have embraced this trend. And in the West, Amazon has upgraded its live streaming function, adding interactive features like chat rooms. Companies, including Google and Facebook, are also developing and investing in technologies to integrate video and e-commerce.
直播电商它其实已经开始成为主流，它未来的发展空间跟潜力都是巨大的。接下来大家会越来越依赖这种购物方式，会变成一个比较日常化、比较规范化的这么一个趋势。
If you look at the numbers alone, their numbers alone, Li Jiaxi's numbers or Via's numbers, you know that they can sell and you know that they can generate revenue. Are they able to sustain it over a long period of time? It depends on how innovative they are at changing some of the things that they do.
But you can't expect consumers one day turn into virtual shopping for good. There will be the nature of us that crave to go into the store, to touch the goods and actually wear it and see how it looks like and walk around in that with our friends. And those things wouldn't be replaceable with live streaming.
You could imagine that the oceans are actually the largest battery. We're storing huge amounts of energy in the oceans. The wave motion can be very deep. It can extend down several hundred meters. And once it gets to the near shore, from about 50 meters, the whole water column is moving backwards and forwards.
As we search for ways to reduce our reliance on fossil fuels, some are looking to a largely untapped potential source of renewable energy. In theory, waves off the coast of the United States alone could generate over 2 trillion kilowatt hours of electricity a year, enough to power more than half of the country.
Waves intensify and subside not as quickly as the wind, and that means that it can produce a smoother power generation curve. One of the potential advantages of wave energy is that it could act as a complementary source of power compared to other renewables on the grid if it were to be scaled up to commercial scale.
For decades, engineers have been trying to convert wave energy into electricity, but a host of technological and financial challenges have complicated their efforts.
In the years from around 2006 to 2015, there were a spate of bankruptcies in the sector, and this was largely because of a lack of kind of continuous proven projects out at sea with reliable electricity generation.
Since then, companies have been trying to develop the technologies at a steadier pace and with a smaller cash burn. But the same questions remain. Can companies develop devices and technologies that actually work? Is wave energy just a novelty or something that can become a major renewable energy source?
The sea is a very challenging environment within which to operate a power project. So seawater is corrosive and conditions are very rough. So this means that power projects don't have a very long lifetime, and it increases operating and maintenance costs.
Partly because of that, many early wave energy projects hit rough waters, such as the Palamas Wave Energy Converter in Portugal and the Isla Limpet project in Scotland. But that hasn't stopped others from trying.
Companies are focused on testing projects out at sea, proving their durability, trying to raise capital and bring down cost. The sector hasn't really converged around one single technology design, and companies are kind of undecided about which design works best.
Finland-based AW Energy is a veteran in the sector. The first proof of concept of the company's device was made in the 90s after diver Rauno Koivusaari observed the strong back-and-forth movement of a hatch cover in a shipwreck in the Baltic Sea.
The waves are generated far from the coastline, so the wind blows on the surface of the water, causing the water particles to rotate, and that rotation extends deep down below the surface, and the waves can be very long. They can be several hundred meters long. And as they come into the near shore, this rotational energy turns into an elliptical energy, and eventually backwards and forwards, as you probably noticed if you've been swimming on the seashore in large waves, you're pulled in and out. That's the energy that we're extracting. There's a sweet spot where we deploy, so around 10 to 15 meters of water depth. That's where there's still strong wave energy coming in.
After years of research, prototyping and testing, the company has deployed Wave Roller, a 350 kilowatt device in the waters of Portugal. Wave Roller has an 18-meter wide and 10-meter high steel panel fixed to the seabed via a floatable foundation. The panel moves back and forth with the waves, capturing the energy.
It's submerged in the depth of 15 meters, so it's protected from the extreme waves. We generate electricity by capturing the movement with hydraulic circuitry in a machine room underneath the surface. That hydraulic energy we turn to electricity with hydraulic accumulators and hydraulic motors, and also a generator.
The Wave Roller has survived large waves at sea for over a year and delivered electricity via an underwater cable to the grid in Portugal. Meanwhile, the company has won a €2.5 million grant to work on an upgraded version of the Wave Roller, aiming to increase the electricity generation capacity to 1 megawatt. The upscaled device would have a bigger panel, 2 power takeoff units, and improved software to control the energy production.
We have taken into use a wave prediction algorithm that kind of tells us what kind of waves are coming in to our device. That gives us few seconds to prepare for capturing more energy, and the difference in that is significant.
Our future plans are to deliver technology around the world. So I'm hoping we can be working on delivering technology to projects in Asia and also in the American continent as well.
Meanwhile, Israeli company Eco Wave Power is taking a different approach to capturing the power of the ocean. For the company's founder, Ina Braverman, developing new sources of renewable energy is a personal mission.
I was born in Ukraine in 1996, and 2 weeks after I was born, the Chernobyl nuclear reactor exploded, causing the largest in history nuclear disaster. I was one of the babies that got hurt from the negative effects of such explosion. I had a respiratory arrest and a clinical death. Luckily, my mother, a nurse, approached my crib on time and gave me a mouth-to-mouth resuscitation, which saved my life. I got a second chance in life and decided to do something good with it.
Growing up, Ina wanted to be a politician to positively change the world. After working as a translator at a renewable energy company, she decided to change paths.
solar and wind energy were fully commercialized, there were a lot of amazing technologies implemented everywhere, I saw that wave energy, although it's an immense source of electricity, the biggest companies in the world are trying to develop wave energy with no success. And there was kind of a race going on in the world of who is the company that is going to develop a viable wave energy solution first.
In 2011, the then 24-year-old Inna co-founded EcoWave Power. Instead of installing devices offshore, the company's devices are attached to existing breakwaters, jetties, and piers.
Our technology is very cost efficient, especially in comparison to the offshore technologies, because we don't need any ships, divers, underwater mooring or cables. We install on existing man-made structures, and all our expensive equipment, the generator, the hydraulic conversion unit, the automation, is located on land just like a regular power station. This is the EcoWave Power conversion unit that has been operating in Jaffa Port since 2014 until 2020. Here you can see how the technology works. Basically, the floaters are going up and down and pushing the hydro cylinders, which transmit biodegradable fluid into land-located accumulators. A pressure is being built. The higher the waves, the higher the pressure, which is used to turn the hydro motor, which is turning the generators. The whole system is controlled by a smart automation system, which you can see right here. And in case of upcoming storms, the system automatically raises the floater above the water level and keeps them in the upward position until the storm passes.
The company has been operating a 100-kilowatt grid-connected device in Gibraltar since 2016, which is enough to power 100 households. Currently, Inna and her team are working on another 100-kilowatt project at the port of Jaffa in Tel Aviv.
The project will be also the first time in the history of Israel that wave energy will officially connect to the electrical grid. And our goal going forward is to expand it to all suitable breakwaters in the city of Tel Aviv and to supply a significant part of the city's electricity needs.
Today, engineers and entrepreneurs are still trying to crack wave energy. Globally, only a few hundred kilowatts of wave energy are deployed, compared with gigawatts of offshore wind. But the field has come a long way in recent years, and with the right engineering solutions, this new power source could eventually become competitive with more mature renewables like solar and wind.
I would have a lot more confidence in the success of wave energy companies today as opposed to like 20 years ago. But in the next few years, or maybe the next couple of decades, it will be more likely to be used in remote locations like islands that are otherwise dependent on expensive diesel power, or out at sea on gas decommissioning rigs, or for powering underwater autonomous vehicles.
So definitely wave energy can compete with other renewable energy sources, but I personally believe that this is not a competition. In order to have a 100% renewable energy friendly world, we need all renewable energy sources to work together.
all these people from?
So can you please tell me? I'm not going to... please wait.
You know, I've covered a lot of companies. I've covered a lot of Machiavellian companies where, you know, people play rough. I don't think I've ever seen anything on the scale of Nissan.
He is making you, but you act from this side. I mean, it's corrupt. Your system is...
One of the most dramatic elements was Ravinder Passi's home being raided by court officials in Yokohama.
You scared my wife. You scared my children. I worked in Nissan for 16 years.
So Rav Passi's journey into the darkest recesses of the Japanese corporate world started when he was the general counsel, the highest corporate lawyer position in the company.
In the past few minutes, Nissan has revealed that its chairman has been arrested after allegations of serious misconduct.
He was tasked with investigating Carlos Ghosn. And he was told, conduct an internal investigation and get to the heart of the matter. And then along the way, he started to notice serious conflicts of interest.
He is one of the few people who knows an extreme amount of detail regarding the alleged crimes by Carlos Ghosn. And he's now ready to tell his own story on the record about some of the events that happened.
My name is Ravinder Passi. I'm the former Global General Counsel of Nissan Motor Co. Limited. And you could say, yes, I had a front row seat in terms of what was going on.
When Carlos Ghosn saved Nissan years ago, he was depicted in Japanese comic books as this hero, and now maybe we'll see comic books where he's the villain.
In corporate Japan, Nissan was quite an unusual company. It was led for 2 decades by a non-Japanese executive.
Well, Carlos Ghosn was a hero in the Japanese business world. If you had a global business celebrity in Japan and worldwide, it was definitely Carlos Ghosn.
In a country with few foreigners at the top, he stood out. But over the years, he saved Nissan from bankruptcy, allied with Renault and Mitsubishi, and turned the alliance into one of the most competitive in the world.
Yet as the years went on, you know, I think his ambitions changed a little bit. He started thinking about legacy plays, and one of them was to really tighten the alliance between Renault and Japan. And unbeknownst to him, there was a contingent of senior Nissan executives that were really felt threatened by that move. They really thought that they would lose complete control of the car company, and even in the government, there was probably a little bit of anxiety about a national champion in the auto industry falling under full-blown foreign control.
Carlos Ghosn was an auto industry leader, respected by many in Japan. Now he's in jail.
The arrest of Carlos Ghosn came completely out of the blue. This was in November of 2018. He was coming to Japan on Nissan's corporate jet for a regular executive meeting, and he was met on the tarmac by Japanese authorities who whisked him away to a jail and charged him with financial misconduct crimes.
So what happened was that a power struggle ensued inside the company, and somewhere along the way, it was criminalized. By that I mean that there were allegations leveled at Carlos Ghosn about the way he reported his pay to Japanese authorities, the way he handled money inside the company, that in other contexts might have been a board action, might have been handled internally. A number of executives at Nissan decided to take this difference and take it over to the Tokyo prosecutor's office, and that unleashed